All right. Hello, everybody. Welcome back to the channel. We are a couple minutes away from Jay Powell going live and speaking about tariffs, rates, the economy, inflation, etc. We don't know how long he's going to be speaking. I would imagine it's probably 45 minutes, maybe with some Q&A. And that'll probably lead us into the market close. We'll see if it's a little bit too, if it's only like 20, 30 minutes, then we'll do a separate market close stream. If not, then we'll just get into it. But as he's about to speak, thank you everybody for being here. We've got new lows of the day across the entire market. NVIDIA right here, when I left, it was at 105. Now we're at 103.7, down about 7.59% on the day. That is taking out the Qs down 2%. Webull was up 20%. That one went red. Meta, new low of the day, 508. Actually, it hit 505, but it's back below 512, which is the price it was a couple hours ago. And then S&P 500, 531. That's down about 1.24% on the day. Google's down 1%. Netflix is down. Tesla now down 3%. Tesla was down 2.5, so that's going down even further. And then AMD is down 7% as NVIDIA is down almost 8% on the day, 7.5. What is holding up very nicely, which is correct right here, Bitcoin. I know we've been floating the theory around of, hey, is Bitcoin actually going to be the hedge that everyone thinks it's going to be, or that really it's promised to be the hedge against the insane money printing and the volatility of the traditional financial system? My guess is still no, but it's acting like it is. And I guess if it is that hedge, then that's not the worst thing in the world for those that are big in crypto. Another thing that is acting like a hedge, folks, we have a new all-time high. We had a new all-time high 2 hours ago, but it's a new all-time high off the all-time high. Gold, 3,300 an ounce, 3.32% up on the day. Absolutely incredible. Absolutely incredible here in the context of gold. It's very obvious that people are not really that fond of stocks right now. They're definitely not that fond of bonds, even though bond yields are slightly going down on the day, 0.008%. They're going into gold. Gold now up almost 30% year to date. And it's not been the worst hedge right here. So what do we expect from Jay Powell speaking? I think it's going to be pretty simple. I think he's going to talk about inflation expectations. CPI and PPI last week were incredible, coming in negative for the first time in the past couple of years, especially on monthly and on the core reading, which is what the Fed looks at. So I think he's going to say, hey, we're making really good progress on inflation, which he's not wrong about. What I am scared about is his tone when it comes to tariffs. Now, I don't think he's going to be that different from what he said 2 weeks ago, where he essentially said tariff inflation is transitory, but it can be everlasting if the tariffs are more advanced. We had Waller, who was super bullish yesterday and said, hey, we think the tariffs are going to be inflationary, but we don't think the tariffs are going to be that inflationary, aka transitory. Does Jay Powell go the same route? And does he go dovish and say, yeah, we think, or and almost warn them by saying, if you guys go the route you're going, we are going to have a lot of issues when it comes to inflation coming down. Audio glitch. Hold on 1 second. 1 second. Okay, let me fix it. 1 second. Good. Oh no, it still sucks. It sucks. Hold on. Okay, I'm using this mic. Give me a second. Mic. That mic. Hold on 1 second. Switch this right here. Okay, give it a second. Should be switching back right here. Let me know if this sucks or not. Let me know. I am not absolved of the tariffs, just like anyone else. Yes, we're good. I think this should be better. All right, Jay Powell, is he live? He's about to be live. He's not live yet. We'll switch when he's live. Better. Good. Okay. Cool. Perfect. Good. I have to unplug it and then plug it back in, and then it gets so weird. He's speaking at the Economic Club of Chicago. What I was saying is he might be using this opportunity to give a warning to the administration and basically say, hey, if you guys go through with this policy, then we are going to have massive amounts of inflation, and maybe Trump takes him seriously, maybe not. But he might use this as an opportunity to to end up saying that. JPow's not live yet. He's about to be live in a second. The audio's bad again? Really? Okay, I'm going to switch to the computer mic. That's being weird. How about now? How about now? Okay, I'm going to switch to the computer mic. That's being this should be better. Weird. This should be better. This should be better. It's not my connection. It's not my connection. Let me switch to JPow. He's not live yet, but he should be live in a second. Let me see if I can fix the audio in the meantime.
Keeping inflation well anchored, that's going to be the key for the Federal Reserve and the key to avoiding any persistent ongoing effects from tariff inflation. On the economic outlook, the Fed chair will say that the data suggests so far that growth has slowed in the first quarter, with consumer spending growing only modestly. He does take note of the strong imports we've seen, the front running, reflecting business.
Okay, are we better now? He's not live yet. JPow's not live. Markets dumping though, right? Are we getting a dump? Oof. Yep. There you go. S&P below 530. There you go. He's not live yet. I will switch as soon as he's live. He's not there yet. But audio, good. Okay, cool. Yeah, he's not live yet. Anyway, what I was trying to say before all the audio stuff is I think he might use this opportunity as a way to tell the administration, if you guys keep doing this policy, we will have massive inflation and I'm not going to bail you out, aka I'm not going to cut. Now, I don't think he gets that hawkish, but there's a world in which he gets that hawkish if some of the other Fed presidents want him to be that hawkish as well. He is live. It's not on my screen yet that he's live. No, he's still not live here. Let me pull up another stream to get him. Is he? He's not live on CNBC. Give me a sec. We're switching in a second. Do they switch yet? No. Okay, hold on. Switching right here.
No, look, it's interesting that he did not echo the words of Governor Waller, who said,
the Reserve Bank of India, and before that, chief economist and director of research at the International Monetary Fund. You probably know him as a regular contributor to the Financial Times. He speaks extensively on economic and financial issues. Please give a warm welcome to Professor Rajan. And then our featured speaker will be Jerome Powell, the 16th chair of the Board of Governors of the Federal Reserve System. As head of the U.S. Central Bank, as you know, Chair Powell plays a crucial role in the country's monetary policy, oversees major financial institutions, and maintains economic and financial stability in this country. He was first appointed as a board.
Okay, he's not live yet. They're going to keep talking for a second, but we do have his statements. I will switch as soon as he's live, but he's not talking yet. Here are the statements, guys. We're getting it right here because they release the statements before they go live. Powell says, so far, larger than expected tariffs likely mean higher inflation, slower growth. That's not good. Administration's policies are still evolving. Effects remain highly uncertain. Again, that's not good. And economic impact of tariffs likely larger than expected. So there you go. That's exactly what he's going to talk about in the next couple minutes when he goes live. Still not live yet. But the reason the market probably took a little bit of a dip right there is because JPow said what I kind of thought he was going to say, which is that if Trump continues to have this tariff policy, the inflation will not be transitory, which is what he said 2 weeks ago. It will be long lasting. And that's hawkish, which also means we're not going to get a rate cut unless we get a slowdown of growth, which then means we're in a recession. Wow. Rate cut probabilities for May after these statements went from 20% to 11% just now. It was 20% in the morning. It is now 11%. So there you go. That's what JPow said. Again, he's still not live yet. I will switch as soon as he's live. They're doing introduction of him. So that is what's messing up the market. Where is NVIDIA? NVIDIA 103.2. There you go. If you bought the dip at 104, 105 today, unfortunately, it continues to fall, down 8% on the day, 20 cents away from going below 103. The Q's down almost 3%. Meta down 3%, $5 away from going below 500. As these comments from JPow insist that a rate cut might not be here to save you if tariff inflation lasts longer than expected. Tesla right here down about 3.8%, Netflix down 1%, AMD down 7.5%, Google down 1.6%, Enphase down 1%, Rocket Lab down 4.6%, and then Uber down about 0.5%. Again, NVIDIA 103.34 right now. Palantir's down 6.2%. What? Wow. Pounter was down 3% last time I checked. Now it's down 6%. All right, so that's a doubling of Pounter getting hit. All right, here we go. Here's Jay Powell. Here we go.
It's great to be back in Chicago. And thanks for that kind introduction, Austin. So I'm looking forward to our conversation, my conversation with Professor Rajan Raghu. But first, I'll briefly discuss the outlook for the economy and monetary policy. So at the Fed, we are always focused on the dual mandate goals that Congress has given us: maximum employment and stable prices. Despite heightened uncertainty and downside risks, the U.S. economy is still in a solid position. The labor market is at or near maximum employment. Inflation has come down a great deal, but is still running a bit above our 2% objective. Turning briefly to the incoming data, we'll get the initial reading on first quarter GDP in a couple of weeks. The data we have in hand so far suggests that growth has slowed in the first quarter of this year from last year's solid pace. Despite strong motor vehicle sales, overall consumer spending appears to have grown modestly. In addition, strong imports during the first quarter, reflecting attempts by businesses to get ahead of potential tariffs, are expected to weigh on GDP growth. Surveys of households and businesses report a sharp decline in sentiment and elevated uncertainty about the outlook, largely reflecting trade policy concerns. Outside forecasts for the full year are coming down, and for the most part, point to continued slowing, but still positive growth. We are closely tracking incoming data as households and businesses continue to digest these developments. In the labor market, during the first 3 months of this year, non-farm payrolls grew by an average of 150,000 jobs per month. While job growth has slowed relative to last year, the combination of low layoffs and lower labor force growth has kept the unemployment rate in a low and stable range. Meanwhile, the ratio of job openings to unemployed job seekers has remained just above 1, near its pre-pandemic level.
$97 premium, $20.
Sorry, I don't know why this is not on the attic. Sorry, guys.
In solid condition and broadly in balance, and is not a significant source of inflationary pressure. As for our price stability mandate, inflation has significantly eased from its pandemic highs of mid-2022 without the kind of painful rise in unemployment that has frequently accompanied efforts to bring down high inflation. Progress on inflation continues at a gradual pace, and recent readings remain above our 2% objective. Estimates based on the most recent data from last week show that total headline PCE prices rose 2.3% over the 12 months ending in March, and that excluding the volatile food and energy categories, core prices rose 2.6%. Looking forward, the new administration is in the process of implementing substantial policy changes in 4 distinct areas: trade, immigration, fiscal policy, and regulation. These policies are still evolving, and their effects on the economy remain highly uncertain. As we learn more, we will continue to update our assessment. The level of tariff increases announced so far is significantly larger than anticipated, and the same is likely to be true of the economic effects, which will include higher inflation and slower growth. Both survey and market-based measures of near-term inflation expectations have moved up significantly, with survey participants pointing to tariffs. Survey measures of longer-term inflation expectations, for the most part, appear to remain well anchored as well. Market-based break-evens continue to run close to 2%. So, as we gain a better understanding of the policy changes, we'll have a better sense of the implications for the economy, appear to remain well anchored as well. Market-based break-evens continue to run close to 2%. So, as we gain a better understanding of the policy changes, we'll have a better sense of the implications for the economy and hence for monetary policy. Tariffs are highly likely to generate at least a temporary rise in inflation. The inflationary effects could also be more persistent. Avoiding that outcome will depend on the size of the effects, on how long it takes for them to pass through fully to prices, and ultimately on keeping longer-term inflation expectations well anchored. Our obligation is to keep longer-term inflation expectations well anchored and to make certain that a one-time increase in the price level does not become an ongoing inflation problem. As we act to meet that obligation, we will balance our maximum employment and price stability mandates, keeping in mind that without price stability, we cannot achieve the long periods of strong labor market conditions that benefit all Americans. We may find ourselves in the challenging scenario in which our dual mandate goals are in tension. If that were to occur, we would consider how far the economy is from each goal and the potentially different time horizons over which those respective gaps would be anticipated to close. As that great Chicagoan Ferris Bueller once noted, life moves pretty fast. For the time being, we are well positioned to wait for greater clarity before considering any adjustments to our policy stance. We continue to analyze the incoming data, the evolving outlook, and the balance of risks. We understand that elevated levels of unemployment or inflation can be damaging and painful for communities, families, and businesses. We will continue to do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to our discussion.
All right, so we got a Ferris Bueller reference as the S&P is down about 2%. Here we go. This is going to be the actual discussion on what's going on with the economy.
For those remarks, I look forward to your elaborating on them in the course of the next 40 minutes or so. I understand last time you were here, Melody Hobson interviewed you. Well, I'm a poor substitute, but I'll try and compensate in the quality of the questions. As you repeatedly emphasize, communication and transparency are very important for the Fed. I would like to get more from you on some of what you just said. As a former central banker, the only sort of caution I've been given by the economic club is to not lapse into central bank speak. So I'll try my best not to do that. Let me start by saying you've guided the Fed through some really difficult events, including the pandemic, the dash for cash in March 2020, the great inflation, the banking crisis centered around Silicon Valley Bank. And then over the course of the last year, we've seen a growing possibility of a Fed-engineered soft landing. And now it seems like everything has changed. In the course of a couple of months, JP Morgan has shifted to estimating the probability of a recession this year at around 60%. What do you think about all this?
Well, first of all, thank you for being here today. It's a pleasure to be here with you. Actually, the appearance I did here was my very first appearance as chair 7.5 years ago. So it's great to be back. And I would agree with you that it's been an eventful 7 years. Putting it mildly, I keep waiting for the 3 months of calm, that never comes. But to your question, I guess to set the stage, let's look back at 2024. 2024 was a year where the economy grew 2.4%. Unemployment remained in the low fours, close to mainstream estimates of maximum employment. And inflation came down and was running at the end of the year around 2.5%. That's the economy that we had. And I won't decide how to characterize that, but that's where things were. Where we are now, again, to your question, is the administration is, as I mentioned in my remarks, is implementing significant policy changes, and particularly trade now is the focus. And the effects of that are likely to move us away from our goals. So unemployment is likely to go up as the economy slows in all likelihood, and inflation is likely to go up as tariffs find their way, and some part of those tariffs come to be paid by the public. So that's the strong likelihood. And my hope is that we'll get through this and get back. Well, we're always going to be aiming for maximum employment and price stability. That's what we do. I do think we'll be moving away from those goals probably for the balance of this year, and then, or at least not making any progress, and then we'll resume that progress as we can.
Let's talk a little more about tariffs. I mean, you recognize that some of the effects of the tariffs will be one-off, transitory, but you also have said that perhaps they will give room for a number of firms to raise prices. You mentioned dryers. When washing machine prices went up because of tariffs, dryer prices also went up in tandem, even though they weren't tariffed. What's your sense about the effects of tariffs on inflation? What would make them more persistent? And what would make them have effects on growth?
So in a kind of a simple starting point is one tariff comes in that gets passed along in prices and raises inflation, but it's just a one-time thing. So the price level goes up and that's it. But that can happen in some circumstances, but it depends on a number of things which we don't know yet. And I would point to a couple of them, or three of them actually. One is just the size of the effects. And as I mentioned, the tariffs are larger than forecasters had expected, certainly larger than we expected, even in our upside case. We looked at a range of cases. So that's one. The second one is how long does it take for the tariffs to have their effects on inflation? To the extent it takes longer and longer, that raises the risks that the public will begin to experience higher inflation. They'll come to expect it, and companies will come to expect it. So that risks higher inflation. And the third is just what I mentioned in my speech, which is my remarks, which is got to keep inflation expectations well anchored. So if we have those three things under control, that's what it will take. And indeed, our role is to make sure that this will be a one-time increase in prices and not something that turns into an ongoing inflation process. That's a big part of our job.
What about the effects of tariffs on quantities? With the level of tariffs that, for example, have been currently applied on China, there's a fear that the supply chain may get disrupted, that firms may not be able to import their relevant stuff from China given the level of prices. If it turns into a supply shock, would the Fed's response be different than if it was primarily something which affected just prices?
So I actually had dinner at the Chicago Fed last night and with a number of directors of various parts of the Chicago Fed, and many of them are CEOs of significant companies, and they this uncertainty that they're feeling and the issue with imported components to their products is just a huge issue. But with if you look back at the pandemic, if you remember, there was a shortage of semiconductors, and that led to a shortage of cars at a time of extremely high car demand. And it was a prolonged shortage because production couldn't keep up. And that led to an extended period, one of the things that led to an extended period of inflation. So when you think about supply disruptions, that is the kind of thing that can take time to resolve, and it can lead what would have been a one-time inflation shock to be extended, perhaps more persistent, and we would worry about that. In this case, you can look at the car companies, which their supply chains are likely seem to be on track to be disrupted significantly, and you would worry that process will take some years and that the inflationary process might be extended. So these are all of this is highly uncertain. We're thinking now really before the tariffs have their effects as how they might affect the economy. And that's why we're waiting really to see what the policies ultimately are, and then we can make a better assessment of what the economic effects will be.
Let's move to immigration. You talked about the labor markets being in reasonable equilibrium right now. Of course, what we've seen over the last few months, months of the previous administration continuing into this administration, is immigration has fallen off considerably. What's your sense on how that will affect the labor market?
So part of why growth was so strong in the last couple of years was just very high levels of immigration, and those people went to work. The economy hired them. There was a lot of demand. We were still working off the labor shortage. What's happened since the prior administration changed their policy, as you mentioned, immigration has fallen very sharply, and therefore the growth of workers has really stopped. It's really stagnant. But at the same time, demand has also fallen. And so demand for workers, so payroll job creation has also fallen, and they've kind of fallen in tandem, which is why the unemployment rate has been pretty stable for about a year. So in a way, demand and coincidentally, perhaps to some extent, demand and supply for workers has fallen. In terms of the effect on the labor market, right now we're still at full employment, and labor force participation is still strong. Wages have moved back down to levels that are now pretty sustainable, given an assumption about productivity. So the labor market's in a really good place. Longer term, the effects of immigration are not thought to matter much for inflation. The effects on demand and supply will more or less cancel each other out. So we wouldn't expect there to be a big impact on inflation.
You've seen in recent weeks substantial talk about layoffs in government, as well as freezes in research establishments and universities in jobs. How soon and how big will this be in its impact on labor markets?
So it's too soon to say, but what I can say is, of course, the people being laid off in government, this is highly significant to them. We don't know how big that's going to be. Right now, it's not big enough to affect a workforce of 170 million people materially. In terms of the cutbacks in funding and for science and things like that, we do see in areas, particularly in cities that have a lot of universities and research hospitals and research institutions, we're really hearing significant layoffs and significant impacts on unemployment. I don't know how much that will total up to. And of course, in addition, cutting back on scientific research may have implications for economic growth, for productivity, for health, for all kinds of things. But those are very difficult to estimate in real time.
Now, given that we're talking about the future, you may be confronted in the not so distant future with both higher levels of unemployment as well as potentially higher inflation. And of course, the policies that each one requires could be different. You talked a little bit at the podium about how the Fed would see these two and how it would address it. Just giving you a chance again to elaborate on that.
Right. So most of the time, when the economy is weak, inflation is low, and unemployment is high, and both of those call for lower interest rates to support activity, and vice versa. So most of the time, the two goals are not in tension, and they're not really in tension now. The labor market is still strong, but the shock that we're experiencing, the impulses we're feeling, are for higher unemployment and higher inflation, and our tool only does one of those two things at the same time. So it's a difficult place for central banks, to be in terms of what to do. And so the best we can do is we actually have a little provision in our consensus statement, which is the thing that we vote on to embody how we approach these questions. What we say is we will look at how far the economy is from each of those two goals, and then we'll ask, might there be different paces at which they would approach those goals? We'll look at those things and think about them, and we'll no doubt be a very difficult judgment. Again, we're not experiencing that now, but we could well be in that situation, as I mentioned in my remarks.
Just want to pick up on a word that is often used today, uncertainty. As a respondent to a Dallas Fed survey said, I've never felt more uncertainty about my business in my entire 40+ years career. The worry today is not just about immediate policy uncertainty, but an entire change in the US's economic philosophy. Not just policy uncertainty, so to speak, but structural uncertainty. One of the effects, as you've pointed out, of higher levels of uncertainty is that firms postpone investment. For instance, even after the tariffs stabilize, firms that contemplate reshoring production facilities will hesitate, not knowing if the tariffs will be reversed in the future, maybe by the next administration. How do you take such longer-term uncertainty into account in your policies?
Let me just agree that what comes back very strongly, and everyone will understand this. these are very fundamental changes in, long held in some cases policies in the United States, and there's not any real experience. I mean, the Smoot-Hawley tariffs were actually not this large, and they were 95 years ago. So there isn't a modern experience of how to think about this. And businesses and households are saying in surveys that they are experiencing incredibly high uncertainty. There's a lot of research, some of it from the Fed, showing that that does lead to businesses and households stepping back from decisions, which of course makes common sense. And you hope that that's something that you go through a phase, and then you know what things become more certain, and therefore people can resume normal economic activities given their understanding of what is the new normal. I mean, your question really is, what if the uncertainty remains high? I think that's a difficult environment. I think people's expected rates of return would have to be higher. I think people that would weigh on, to me, investment just in general. If the United States were to become a jurisdiction where risks are just structurally higher going forward, that would make us less attractive as a jurisdiction. We don't know that at this point, but I think that would be the effect.
Well, let me turn to financial markets. We've seen some volatility, especially stock market volatility. I mean, the levels of the VIX are up to the levels they were in the early days of the pandemic, coming off somewhat now. Some people believe the Fed will intervene if the stock market plummets, the so-called Fed put. Are they correct?
I'm going to say no with an explanation. So what I think is going on in markets is markets are processing what's going on. And, it's really the policies, particularly the trade policy. And really the question is, where's that going to come in? Where's that going to land? And we don't know that yet. And until we know that, you can't really make informed assessments that would still be highly uncertain. Once you know what the policies are, it'll still be highly uncertain what the economic effects will be. So markets are struggling with a lot of uncertainty, and that means volatility. But having said that, markets are functioning, conditional on being in such a challenging situation. Markets are doing what they're supposed to do. They're orderly, and they're functioning just about as you would expect them to function.
So we've seen
Jerome Powell says there is not a Fed put. The S&P 500 right here down 2.5%, NVIDIA down 9%, essentially saying he thinks markets will recover, but he is not going to step in with QE. That is currently what he said just now when asked if he will step in if the stock market continues to fall.
Volatility also in the bond market. And at a time when usually there's a flight to safety, we saw yields on the German Bund and the Japanese government bond come down, but we saw yields on US treasuries go up. What do you attribute this to?
So I would just say the same thing. I think it's very hard to know in real time. I've had a lot of experience with significant moves, for example, in the bond market, where there's a narrative that people land on, and then 2 months later you look back and go, that was completely wrong. So I think it's very premature to say exactly what's going on. Clearly, there's some delevering going on among hedge funds in levered trades and things like that. It's also, again, it's the markets processing historically unique developments, and with great uncertainty. And I think you'll probably see continued volatility. But I wouldn't try to be definitive about exactly what's causing that. I would just say markets are orderly and they're functioning kind of as you would expect them to in this time of high uncertainty.
So the Fed, in its last meeting, slowed the pace of shrinking of its balance sheet. Was this driven by uncertainty about how much reserves and liquidity the market needed, and you wanted to take a little more time to find that out? And flip side, you said the market was orderly. What if market disruptions emerge? Would the Fed intervene?
So we think that reserves are still abundant. So we don't think we're close to the point, particularly close to the point where we would stop. But we were facing a situation in which, for other reasons, there were going to be big flows into and out of reserves as it had to do with the debt ceiling and the Treasury General account. For those of you who are Treasury market people, that'll make sense. But while those big flows are happening for over a period of 6 months, we would actually be shielded from being able to see evidence that we were or were not getting close to the level of less abundant reserves. And so we decided to slow the pace. We thought about pausing, and instead we debated it. It's one of these great debates that we have at the FOMC. We decided to slow the pace instead. And people really came to see the merits of that because, the slower we go, the less the smaller the balance sheet can get without disruptions. And we want that process to continue. And now it's at quite a slow pace. So we think that's a really good thing. So that means it can go on for a longer amount of time, and we'll be able to reach kind of very carefully what we think is the right level of reserves. Still plenty of reserves.
What about the international dollar-based system? With all these disruptions, do you stand ready to supply dollars to central banks as you've done in the past when there's been a global shortage of dollars?
Sure, absolutely we do. Just for everyone's knowledge, we have standing dollar swap lines with 5 large central banks, and they go to the jurisdictions where there are big overseas dollar funding markets. And in effect, those are overseas markets where, for example, a European or Asian institution is buying an asset-backed security that is backed by loans to American consumers. So in effect, these are loans to American consumers. And we support that. We want to make sure that dollars are available. They need dollar funding to hold those dollar assets. So the way it works is, when needed, we lend to the central bank in dollars, and they pay us back in dollars. They then pay in their currency. They lend on in dollars, and so we take no credit risk or anything like that. And it supports dollar funding markets. Dollar funding markets are very sensitive during times of crisis, and it's very helpful. The reason we do it is it's really good for U.S. Consumers. So we'll continue to do that, just as part of the dollar being a reserve currency, the reserve currency, most important. And we will do that.
You mentioned amongst the issues you were focused on was the U.S. fiscal situation. Well, clearly, U.S. sovereign debt continues to rise. And what are your thoughts on the longer-term implications for interest rates and economic stability? How much further can we go in terms of national debt before we cross a line that might be unsustainable in the long term?
So the U.S. federal debt is on an unsustainable path. It's not at an unsustainable level, and no one really knows how much further we can go. Other countries over time have gone much farther, but we're now, we're running very large deficits at full employment. And this is a situation that we very much need to address. Sooner or later we'll have to, and sooner is better than later. In terms of, if I can say from my time working on these issues, it's not the Fed's issue, but if you look at a pie chart of federal spending, the biggest parts and the parts that are growing are Medicare, Medicaid, Social Security, and now interest payments. And so that's really where the work has to be done. And those are issues that can only be touched on a bipartisan basis. Neither party can figure out what to do without both parties being at the table. So that's critical. All of this domestic discretionary spending, which is essentially where 100% of the conversation is small as a percentage of federal spending, and is declining it's already declining as a percentage of federal spending. So when people are focusing on cutting domestic spending, they're not actually working on the problem. Domestic discretionary spending is already going down. I like to make that point because so much of the dialogue that the politicians offer is about domestic discretionary spending, which is not the issue.
Well, let's turn to stability and regulation. Turning to the U.S. financial sector, we still have some concerns about distressed commercial real estate loans on bank balance sheets, whether they've been fully dealt with so far. There's some sense that they haven't. Add to that the very rapid growth in various forms of private credit over the last few years, which arguably haven't been tested by a full-blown recession. How would you put the resilience of our financial institutions at this point and their ability to weather potentially uncertain times?
So I think our banking system is well capitalized with liquidity and is quite resilient right now to the kinds of shocks that it may face. I do believe that. In terms of the commercial real estate, there are, and this has been the case, really, we've been working on this for 4 or 5 years now. There are some banks, it's mostly medium and small sized banks who have elevated concentrations of commercial real estate, some of it troubled, and we've been working to make sure that those banks have a plan, have capital, and can absorb the losses that they're doing. So, and that's been going on for some time. The very largest banks don't tend to have high concentrations. So this is a problem that we have known would take years to work through, but we're really well into the process of working through it. In terms of the non-bank financial sector, it's grown enormously. The provision of credit by non-banks has grown just really fast. Most of it has been funded, though, with a private equity-like structure where it's limited partners who are signed up for 10 years to a general partner to invest that money. They're not depositors who can run. You know, your money's committed. And so that funding model is kind of run-proof. That isn't some law of nature, though. So when you do start to see shorter-term funding creeping in, to your point, though, Raghu, this very fast-growing and now quite large private credit part of the economy has not really been through a significant credit event or significant. It's really grown since the pandemic, and so just for that reason and for how fast it's growing, we have a close eye on it. It doesn't have the same kind of prudential regulation, though, that the banking system has. So we're watching it carefully. And, you know, as I mentioned, it's a more stable funding source to the extent its institutional investors signed up for a long period. But we're watching carefully.
Right. Wearing my banking research hat, actually, banks are also involved in funding these institutions in a big way.
Yeah.
We do know the administration wants to relax regulations in many areas, one of which may well be banking. What can you tell us about the Basel III endgame, so to speak, which is, you know, at this point primarily focused on additional capital for the large banks?
You know, the Fed view, and my view, is that we should proceed to complete the Basel III accord, and we would have to do that, and would look forward to doing that in conjunction with the FDIC and the OCC. But our view is, and I think the bank's view as well, is we should complete that. You need international minimum standards. That's kind of a common good, and you know, we're not bound by them. Really, nothing. The United States has plenty of input into what those accords contain. So our view is strongly that we should complete those, and we could do it, I think, relatively quickly. We're not so very far away from what would be a good, I think, outcome.
Well, let me move to something which is more about technological change and new kinds of instruments, cryptocurrencies. How do you see the potential for more favorable regulations coming on them, and potential risks from that for the system?
You know, so we went through a wave of failures and fraud and things like that were the headlines for a couple of years, and I think what you see now is, and during that period, by the way, we worked with Congress to try to get a legal framework for stable coins, which would have been a nice place to start. We were not successful. I think that the climate is changing, and you're moving into sort of more mainstreaming of that whole sector. So Congress is again looking at both the Senate and the House are looking at a legal framework for stable coins. You know, depending on what's in it, that's a good idea. We need that. There isn't one now. And stable coins are a digital product that could actually have fairly wide appeal and should contain consumer protections of the typical sorts and transparency. And that's what the Senate and the House are working on. So that's a positive thing. I also think some of the, we took a pretty conservative, and other bank regulators took an even more conservative perspective on the guidance and rules we imposed on banks. I think there'll be some loosening of that, and I think we'll try to do it in a way that preserves safety and soundness, but that permits and fosters appropriate innovation. but that does so in a way that, again, doesn't put consumers at risk in ways they don't understand, or make banks less safe and sound.
You have a policy review underway. Now, surveys recently tell us there seems to be a distinction between a rise in the level of prices, which is what the public seems to worry a lot about, and the rate of increase in prices, which certainly they worry about in passing, but the Fed worries much more about. That is the rate of inflation. So even though we're coming down to 2%, people remember that over the last few years, it's been an over 20% increase in prices. So as you start thinking about the policy review, is there any thought about how you might want to address this sort of challenge, that it's the path of prices as much as the rate of change which matters?
First of all, I think you're right, and I think the public is right. When we say inflation is back down to 2%, 2.5%, and we think that's a good thing, it is a good thing. But if you're paying 20% more than you were paying in 2021, that doesn't help you much. You're still paying a lot more than you used to be paying for the necessities of life. So it's just another way of saying people hate inflation, and it's easy to understand why. All we can really control is a world in which, in the world we were living in, prices don't go down in the aggregate except in extreme times that we don't want to court. So I don't think we couldn't have a framework where we're going to bring prices down by 10% or something. That's not something we'll be looking at. We're essentially looking at the best way to foster 2% inflation over time. And the things we did back in the changes we made in 2020 were really innovations around what to do when you're stuck near zero. Now we're well above zero, and it may be that we still need to have in our framework a way to deal with that, but perhaps the main case is not one where you're dealing with the effective lower bound, and that would be a framework that looks a lot more like the one that we had before 2020.
Now, one of the tools you brought in to deal with the zero lower bound was quantitative easing. But you've also used quantitative easing to fix disruptions in the financial markets. Are you going to be more specific about what your objective is with quantitative easing as you go through this review?
So in the beginning, it's typically we're using it for financial market function. That was the case with the global financial crisis and with the pandemic. And we did try to explain ourselves through the pandemic, and our explanations did change. But I think it's fair to say we might have done a better job of being clear about why we were doing, and that's something that we're aware of and looking at.
I mean, no discussion is complete without talking about AI.
Yeah.
With AI coming fast and furious, it could affect productivity. It could affect employment. There are some people who say we will see for the first time technological unemployment in a serious way with AI. What are your thoughts about it, and how will it impact the Fed going forward?
So like everyone who's been exposed to what it's capable of, it's beyond, I started thinking about it as like a better version of Google, but it's not. It's like a better version of a person, it can do amazing things. And so the question is, all through the 250 years of technological innovation, technology evolves and people worry that it's going to replace human labor and people will be unemployed. And that hasn't been the case. It may be the case in the short run, but in the long run, what it's done is raise human productivity and therefore living standards. So is this going to be the case where it eliminates more jobs than it creates? And we just don't know. You come back in 20 years, will it be the case that just people are much more productive in their work because of AI? Or will it be the case that AI has just replaced a lot of people? And I think it's very hard to say, but it truly is remarkable in what it's capable of. And it's, we had we had a demonstration by a Wharton professor recently, and you speak to it like it's a person, and it kind of responds like a person, and the things that it can do are really amazing. By the way, this is early days. They're talking about even the next couple of years will bring more dramatic breakthroughs. So I think it's one of the 2 or 3 things most likely to bring dramatic change to the economy all around the world in the next 20 years. And I'd say very hard to say how it shakes out.
Let me turn to your job. An important man once said of your job, it's the greatest job in government. You show up to office once a month and you say, let's see, flip a coin. And then everybody talks about you like you're a god. What is it that you normally do every day in the office? Is it fulfilling and, dare I say, enjoyable? And do you really feel like a god?
So I would agree. I think it's the best job in government. I would agree. I really do enjoy it. Yes, I love the job. It's a great honor to serve. It's quite humbling because everybody makes mistakes. It's just the economy is just not very predictable. All of that is true, and I do what everybody expects me to do. I read. We do a little more reading though as part of our daily. My colleagues and I do part of our daily regime than a typical executive would do. In terms of being a god, I would say that we are blessed with a large number of amply compensated critics who would kind of tend to undercut that. So we don't feel like a god.
So let me go to the more mundane. In that office, what are the key indicators you look for? What are the sources of data that you go to as you try and make up your mind?
So, I'd say start with labor. There's more labor market data and better reliable labor market data than probably anywhere else. And it's just a lot of data. It's new jobs, it's payroll, it's wages, it's participation. You can break all of those down in different categories. It's a million different things. So there's a lot of labor market data. It's a great field if you're going into economics because there's just so much to do. So and then we look at the inflation data. Also, I keep track of global developments pretty carefully, and I talk to my global counterparts pretty regularly just to stay aware of what's going on. Financial markets are really important, and you can and lately something that we're paying close attention to, as you would expect, what's going on around the world in currency markets, in fixed income markets, in equity markets, all of that. For me, though, my background was more in the private sector and as an investor, and for a significant part of my career. And I have to talk to outsiders about what they're seeing and what they're dealing with for it to really kind of fit together for me. I can look at only so much data, and but to really get the story and the narrative, it's more talking to outsiders, and anecdotal data does help things kind of fit together for me, I would say.
Yeah, you told us about speaking with business people last night and getting a sense of what was going on in the Midwest. Let me turn to Fed independence. You've reiterated that you intend to stay in office until the end of your term, and that certainly reassured many in financial markets. What are the levers the government or the legislature have to pressure the Fed? And should one worry about threats to the Fed's independence once you're gone?
So our independence is a matter of law. Congress has, in our statute, we're not removable except for cause. We serve very long terms, seemingly endless terms. So we're protected in the law. So, Congress could change that law, but I don't think there's any danger of that. Fed independence has pretty broad support across both political parties and in both sides of the Hill. So I think that's not a problem. There's a Supreme Court case people will have read probably in today's Journal at which the Supreme Court may decide whether independent agencies generally, whether they're authorizing laws, can contain a provision that prevents the president from firing members of a commission other than for cause. And that's a case that people are talking about a lot. I don't think that decision will apply to the Fed, but I don't know. It's a situation that we're monitoring carefully. Generally speaking, Fed independence is very widely understood and supported in Washington, in Congress, where it really matters. And the point is, we can make our decisions, and we will only make our decisions based on our best thinking, based on our best analysis of the data about what is the way to achieve our dual mandate goals as we can to best serve the American people. That's the only thing we're ever going to do. We're never going to be influenced by any political pressure. People can say whatever they want. That's fine. That's not a problem. But we will do what we do strictly without consideration of political or any other extraneous factors.
Well, I have time for one more question. I know the question that's on all your minds. What are you going to do on interest rates next? But I'm not sure that you know, and I'm not sure you would tell even if you knew. So I'm not going to ask that question. The question I want to ask is a more personal one. What is it that you'd like to do most at home after an exhausting day flipping coins in the office?
I play one of my guitars. I do Zoom calls with my kids and my grandkids, and I go to the gym a lot too, just to stay in shape.
We need you healthy. We need you healthy. Thank you very much, Chair Powell.
Thank you.
And please join me.
All right. Well, that was Chairman Powell. We've got a lot to talk about, folks. We've got a lot to talk about. All right, so here's what I think we're going to do. First of all, is the mic working? Mic good? Yes, yes, yes. Good mic. I think mic should be good. I think we're just going to run into the close, but we're going to, we'll end the close around 4 o'clock. So instead of starting at 3:45 and then going to 5:30, we'll start now, 2:30. And we'll go for the next 90 minutes as we get into the close. So there's plenty to talk about that I think will take up the time, but we will just go into the close with this. So first of all, let's just look at the stock market. Obviously, Jay Powell, the death blow he gave to the market right here today, and it's not his fault, but nonetheless, it is how the market is reacting, is he said there's not a Fed put. Now, you could not believe him, but I think, and we've been talking about this for the past couple of weeks now, I don't think Jay Powell thinks this is his problem. His legacy is not going to be affected if we have a recession because he was late. Some people might blame him for that, but the far majority of people will obviously blame the tariff policy as stopping the progress that we made on inflation, if that's how it plays out. So I think from his perspective, and Kashkari said this last week as well, they are in no pressure to engage in quantitative easing or cutting rates unless something really does break. And if that happens, then yeah, they'll step in. But by then it's going to be too late anyway. To be able to solve all these problems. And so 526 right here on the S&P 500. As soon as he said that, we went down 2.5%, getting a couple of green candles right here, rebounding. That was probably a very emotional reaction the market had based on what he said. But we're down about 2.1% currently right now on the S&P 500. NVIDIA getting slaughtered today. 101.74 is where it bounced off of. I think at around, that was 2:20 Eastern. It looks like maybe we set an intraday low for the market. Potentially, we got another hour or 90 minutes left until the market closes. Tesla right here, 239, bounced right at 220 again at 241. So maybe 5 minutes ago was the intraday low, and the market's kind of digesting what he said and is not taking it as seriously anymore. Netflix right here down about 1.3%. Palantir as well, just above 91. It was at 89 5 minutes ago. Bitcoin slightly going positive, 84.2. Or maybe as we get into power hour, which is the last hour of the market, we'll see a little bit more of a dump. So we'll be covering it and see kind of how this is playing out. All right. So what did Jay Powell say? What did Jay Powell say? Thank you, everybody, for being here again. We'll be covering it live for the next couple hours to see what he ended up saying. The 4 main statements, which is what initially started the decline before he even went live, is that he thinks inflation is going to be longer than expected, or he thinks the tariff inflation is going to last longer than expected. So number 1, he said economic impacts of tariffs are probably more than what they thought. He said so far larger than expected tariffs means higher inflation, slower growth, which is stagflation. That's not good. Obviously, that would be a tough situation for equities, but that is what he thinks could play out. Not necessarily stagflation, but just that there's going to be a period of higher inflation with slower growth. Then he says growth likely slowed in Q1 2025 from last year. The Atlanta Fed also said this today, that we're going to be negative 2.4%, which is less than the negative 4% projection that they had a couple of weeks ago. But still, that would be a negative GDP quarter. 2 of those, we get into a technical recession. And then he said tariff policies are still evolving. The effects remain uncertain. Essentially, that, we have to be data driven. And right now we don't exactly know how this is going to play out. For those that missed what he said about the stock market, here's a 1-minute clip when he was asked directly about it. Essentially, he said there is not a Fed put.
Seen some volatility, especially stock market volatility. I mean, the levels of the VIX are up to the levels they were in the early days of the pandemic, coming off somewhat now. Some people believe the Fed will intervene if the stock market plummets, the so-called Fed put. Are they correct?
I'm going to say no with an explanation.
And then he goes in to explain the explanation. The explanation is essentially that he thinks, quote, the market is functioning the way it's supposed to function, which he's not wrong about, to be honest. I mean, the market's not doing anything irrational. The market is pricing in worse earnings, more inflation, more volatility, more uncertainties. What else is the market going to do? It's going to sell off. I mean, it's pretty simple. So I don't think anyone can blame Jay Powell for that answer. And no one can blame him for not stepping in to do QE, because that would exacerbate inflation even more. But, this is the nature of the markets that we're in 2025. And this is pretty much all he can say. One good thing that we're seeing right now, though, is the 10-year coming down. 4.292. So what's happening right now, given yields are coming down, is people are buying bonds. People are actually going to bonds as potentially a source of safety if they're selling off stocks. Now, what was so weird about last week? People were selling stocks and selling bonds, which is incredibly scary, because you cannot have bond yields go up if stocks go down, because it creates a credit crisis. 30-year as well coming down right now, which is nice to see. So maybe something Jay Powell said got the market to have a little bit more confidence in the, debt situation of the United States, to be able to say, hey, we're willing to take a risk on bonds, even though there's really no risk theoretically, versus stocks. But it's nice to see that that's playing out. Again, last week, the big issue, which is why the bond market was screaming, and potentially that's the reason we got that 90-day pause, and the Cent may have stepped in, is because yields were going up when stocks were going down. And you just, that combination is very tricky to navigate. So that's the silver lining here. Even though stocks are falling off, the bond market, which is probably more important than the stock market, is not screaming that they are upset about all of this. They're just saying, all right, fine, we'll buy your bonds, and equities might sell off, but at least yields aren't going higher. NVIDIA right here down about 8.84% currently right now on the day. Now, we didn't talk about China. I'm going to get back to Jay Powell in a second, but we have a couple updates on China that I didn't get into before we went live that are also incredibly important and probably contributing to some of the volatility that we're seeing right now. By the way, Jay Powell also quoted the great American classic, Ferris Bueller's Day Off. And he said, as the great Ferris Bueller once said, life moves pretty fast. So yeah, that helped the blow as the S&P fell 2% when we got a movie quote. Good movie. It's a great movie. Not a bad movie. One of the movies I've actually watched, but didn't expect to hear it in Jay Powell's presser today. Okay, so what do we get from China? Well, this one's going to be a big one for those that have not heard the updates yet. So this is from the Wall Street Journal, not confirmed by the United States, or not confirmed by the White House, but this is what they said about an hour ago. 3 parts. The U.S. is planning to use tariff negotiations to isolate China. Okay. Second, the negotiations are planned to start with 70 countries. Okay. Here's the kicker. The perceived goal of the negotiations with the next 70 countries that they're probably going to be doing over the next 3 months is to ask them to disallow China to ship goods through their country. This is what the Wall Street Journal has been reporting today. To be honest, I think this is the headline that matters. Like, Jay Powell was cool. The Ferris Bueller quote was cool, but this is really what matters. Why does this matter? Well, it is very congruent with what Trump said yesterday. What did Trump say yesterday? He said, quote, we may want countries to choose between us and China. I don't know what the hell this administration is thinking, but if their goal actually is to get all the countries they're negotiating with to isolate China, not saying it can't work, it's just a hell of an argument to go down with, or it's a hell of a negotiation strategy to go down, because it doesn't seem like rhetoric at that point. It seems like they may legitimately be trying to isolate China from the global economy, which is, again, just a little hard to imagine given that China plays, you could argue, even a bigger role than the United States in the global economy when it comes to the supply chains and manufacturing and cost of goods of literally everything that we consume on this planet. So I think that was the actual headline. J-Pow is whatever, but the markets kind of reacted to that headline when it came out from the Wall Street Journal. They're more so reacting to J-Pow. Nvidia right here below 102. S&P not getting a break, still down 2.2%. We might violate those 220 lows that we had about 12 minutes ago if it continues to go down. But I don't know if that'll work, dude. I really don't know if that'll work. And I'm curious if you guys think it'll work. So let's do a poll right here in the chat. Like, as soon as I saw that article come out, I was like, wow, if that's actually the plan, the whole trade war with negotiations with China that I thought would be done in a month. I mean, maybe this lasts for the end of 2025, because if you got to negotiate with 70 other countries to not work with China, there's no way in hell you're going to be able to get a deal with China anytime soon, because you probably don't even want to talk to China, because you want to talk to all these other countries and get them to be an ally with you in regards to kind of banding together to isolate China. And then you got to ask yourself, do the other countries have any incentive to do that? Like, their beef with China is not the beef that we have with China. You know, they have a totally different relationship with China. Some of our Western allies, like Canada, might share our same opinions, but that's not necessarily true across the entirety of the world. And so I don't know if this plan will work. So here's the question. Do you think the U.S. can actually get countries to isolate from China? My gut feeling is no, this is not going to work. And I hope it's a theory and it's not a legitimate strategic choice that they're trying to go down. Again, I'm not saying we got to be best buddies with China, but a deal with China would be way better than trying to convince 70 other countries to not work with them. Because at that point, you know, this is the first take where my mind went to, which, again, I don't think it'll get this intense, but like, if we completely isolate China from the global economic sphere, I mean, what's to stop them from saying, all right, cool, we're invading Taiwan, right? What, like if anything, I think that would, yes, it would cripple their economy, correct, and maybe it would make them very hard to invade Taiwan. But China's got nukes, they've got a military. It's not like they're just going to sit down and play fiddle. So the idea that they wouldn't think, not saying they're going to do it, but think of engaging in even more escalated tensions if everyone abandons them. And then if they invade Taiwan, Taiwan is, you know, those chips are the reason, it's what actually makes the world spin. I mean, it seems like we would just get into a full war with China. Again, I don't think that's going to happen, but these are the things that people are thinking about. And it's a bit scary to think about it like that if that's the actual strategy. QQQ right here, down about 3.3%. IBKR down 10.7%. Robinhood getting hit as well on the day, down 7.5%, as it should. If the market's tanking, Robinhood will tank with it. Webull now down 8.7% on the day. Webull is now at the lowest level in 2 days. It was holding 47 for the past couple of days, went up to 80 yesterday. Now it's back at 37. So that's down 9% after being up 20% on the day. And then Tesla right here, potentially retesting that intraday low. If it falls another couple bucks, then we will be below that 240 range. Hard for a military or country to stay motivated to support the CCP if the economy collapsed. Yeah, I mean, that if we collapse their entire economy, then yeah, it would not be the easiest for the people of China to even support an invasion. But the point is, it's an aggressive trade, or it's an aggressive trade war that's continuing to gain momentum. Here's another headline from China. China is reportedly pivoting from the U.S. to Canada for more oil amid trade war tensions. China has imported 5.9 million barrels of crude oil from the U.S. in January before tariffs began. Small amount, nothing too crazy, but and I would expect Canada to be a loyal friend here, even though we might not have been treating them the best, but I would expect Canada to side with the U.S. and not sell them that much oil, because obviously that would not be the best in terms of Canada-American relations. But what if Canada's like, you know what, screw it. What if Canada's like, hey, the United States has isolated us so much that we've got to go to China, which there were reports coming out a couple of weeks ago that was where people thought the relationship was going. I think at the end of the day, Canada wants to be with the U.S. and not China, but that is the issue right now in terms of how this trade war is developing. So it is rather aggressive in the context of the trade war, and I think that's more important than what Jay Powell said. Now, one thing that's also important is China's GDP growth. NVIDIA right here, new low on the day. Wow, 101.6. The NVIDIA 0.5% away from falling a full 10% on the day. That would be about $300 billion in market cap that it would be falling today. China's GDP growth was actually really good. So China grew GDP at about 5.2%. Now the caveat here, and the expectations I think were like 4.3%. So it grew way larger than what the market expected. The caveat here is that they did a ton of stimulus. And that's another reason why, for those that think that isolating China makes sense, this might be the reason that the only way that China can actually continue this type of growth, which is double the United States growth, is by pumping stimulus into the economy, which is not necessarily the best idea either, because that's going to be very inflationary. So China's GDP to debt ratio, by the way, people always talk about the United States GDP to debt ratio. China's GDP to debt ratio is 320%. The United States is at 145. It's not like that's a good number, 145, but China's is double the GDP to debt ratio that the United States is at. So again, their economy is not in the best situation. The only reason they're able to put up those good growth numbers is because of the stimulus, which they will have to do a lot more of as the tariff war continues to escalate. But they might have their own plans on how they can navigate their growth prospects given the trade war. Now, another thing that's also important to understand about China is that Xi Jinping is in Malaysia today. He's going to Cambodia this week. He was in Vietnam 2 days ago. So he's speaking to the same countries that we want to speak to, potentially to isolate them from China. And he's probably going there to say, hey, no, you shouldn't be isolated from us. And here's why. And so it's kind of up to some of these other countries to kind of figure out who do they actually want to work with. Obviously, the United States would think that they want to work with us, but that's a decision those countries are going to have to make. And that's probably a discussion that Besant and Lutnick are heavily involved in to try to figure out if they can get those countries on their side. NVIDIA right here, again, new lows on the day, 101.45. Where's the S&P? We are officially below. Are we? No, we are about 40 cents away from being below the lows of the day. 524.37. The lows were at 523. NASDAQ just hit new intraday lows. Yeah, the NASDAQ did just hit. There you go. NASDAQ actually did hit. Yeah, and it's more tech focused, so that's why it's tanking worse than the S&P right here. NVIDIA, 9.68% on the day. The dip that I think a lot of people thought was the dip was 104, 105 this morning, and based on what Jay Powell said, it became a dip that kept dipping. S&P 500 right here down 2.5% currently on the day. It's aggressive, dude. It is very, very aggressive. Now, having said that, what is the good news? Well, the good news is that Trump likes to tweet. So I am expecting probably in the next couple hours that we will get a post by Trump, likely complaining about Jay Powell. Maybe he says something else. But one tweet could change this. Also, one tweet one tweet walking back some of the tariff policies could easily change this. Trump's not probably going to do that anytime soon, but you never know. And so that's the bright side of this market, that things can change easily. Again, if they have this 10% universal tariff rate across all the other countries except China, if they slash that in half to 5%, Meta, by the way, below 500, down about 5% right now, I think the markets would rip because they would be like, okay, all of our inflation expectations have to get cut in half, which is a good thing. But, Trump's not going to do that until we get the deals done. And I think that's what everyone's waiting for is when do we officially get these deals to get done. Why is Hood down 8%? Again, volatility is good for Hood, but it is a short-term boost for them. When the markets are down overall, that's less users, less deposits, less margin balances, less net interest income, and less trading volumes, less interest in the market. Now, I know the volatility over the past couple of weeks got Robinhood to be number one on the App Store. More people were interested in the markets, which is a good thing, but you can't have a prolonged period of downturns because then most people just get desensitized and they just don't care anymore, right? They stop caring about the concept of investing because they don't want to invest if everything's tanking. So I think that is why Robinhood's getting hit right here. Down about 8%. Let's get a little bit more coverage on what Jay Powell said, and then we'll keep going there. We'll keep going from there on some different headlines we have right now.
Weaker right now. I mean, it's kind of funny when you talked about the two kids running the other way. I was like, well, put a leash on them or put them in a playpen or something like that, which is what the Fed wants to do with both dual mandates, I think. I think what the Fed does is it stands pat here. I was really interested, Brian, in your analogy about motor vehicle insurance, because that's a really good example. Remember what happened. The price of autos went up, and it was vehicle insurance that came later. And that's the kind of knock-on effect that you got to be worried about as a central banker. Oh, okay, we can see how much cars went up. Oh, but there's this other thing that comes down and pushes up inflation down the road. I think the best possible situation here is for the president to come out very, very strongly and definitively about what these tariffs are going to be, so we can get on with the process of figuring out the future of the economy, the market, and monetary policy.
Steve and Adichie, I've got some very good news for you and all the viewers, and very bad news for me. We're about to begin a massive home improvement project, home construction project. And so I'm going to be living these tariffs real time, firsthand, first person for like the next 9 months. So anything I see, I will tell Steve, and then he can tell the world, and it's going to be great. And I'll probably need an adult beverage or three. Adichie and Steve, thank you very much. Do appreciate that.
Okay, cool. So again, same kind of response that that we all had to what Jay Powell said, which is that, hey, this is not his fault, and until Trump gives clarity, which is essentially what Jay Powell said, until Trump gives clarity, there's not much that he can do right now. Guys, I cannot call Steve. It is 2 p.m. and he is at work. Like, I'm sorry, guys. I love that you love him. I love Steve as well, but I cannot just randomly call him while he's in the middle of meetings. He does not do content full time. By the way, you know what Steve's going to say? He's going to say he doesn't care. He does not care about these macro day-to-day candlestick movements the way we do. He doesn't care about this stuff. So, I mean, his reaction's not going to be that interesting if you want his reaction, unless you just want to hear him say, I don't care, which is fair. I know that might make people feel better, but look, that's my reaction as well. I mean, I'm covering it day to day, but I'm not selling. Just like I said in the morning, at the end of the day, it's very hard to time this. I'm not an active trader. And so it is what it is. You just kind of got to deal with it. But in the moment, living through it, it's a hell of a time to be an investor, because I don't think we've seen something like this. Even in 2022, we knew that we would have rate hikes, and that was the narrative. But this is like getting whipsawed back and forth every day with different headlines. And obviously, it can be very tiring. S&P 500, new low on the day. There you go, 523.83, down about 2.56%. 2.56%. Amit, will you stay live or take a break for the close? I'll be live until the close. So we'll be live until like 4:15 today. We got a bunch of other headlines to go through, but yeah, I'll be live. At what price do you think he would care, Amit? You know, I don't think it's about a price. I think it's about something has to seriously break in the economy for him to care. Because Steve doesn't really care about price action, right? Like, see, like Nvidia goes to 85, 95. Like, that's not something that triggers him. What he cares about more is like, hey, are we not cutting for 2025? Because he's of the belief that the Fed's going to cut at least 3 to 4 times, and I kind of agree with that. But if Jay Powell keeps saying, well, we're not going to step in until we get more tariff clarity and the tariffs are more inflationary, then like we're not going to get those cuts. And that, I think, is one of the saving graces of this market, that we would get some cuts. But currently right now, it doesn't seem like that's how it's playing out. Also, here's a big headline that's important to talk about. Yeah. Remember when Trump said we're collecting $2 billion a day in tariffs? That is incorrect. That is not correct. From the U.S. Customs and Border Protection Agency, they have collected since April 5th, $500 million in total since April 5th. Not $2 billion a day, which would be something along the lines of $20 billion since Trump said that statement. $500 million in total. So, yeah, we have not had that $2 billion a day announcement that Trump said we were collecting. And it didn't make any sense, because I think he initially said $2 billion when we had the reciprocal tariffs, but after we paused, there was no way that number $2 billion could last. By the way, Peter Navarro also said we would have $600 billion of revenue, which is basically $2 billion a day, or a little bit less than $2 billion a day, but around about that number. But he said that before the pause. But then after the pause, where the reciprocal rates go down, Trump kept saying we're getting $2 billion a day. Like he said that on Sunday on Air Force One. But that's not true. Like, we've generated $260 million a day, but not 2 billion. Or sorry, 260 million in those 2 days, which gets you to that $500 million revenue. For the total amount of time since January 20th, it's been about 21 billion in revenue. But again, that's a far cry from the 2 billion in revenue. So I think, and that's just facts. That's not even like opinion. That's just like what the CBP said today. So obviously we're not collecting tons and tons of revenue yet from these tariffs. And it makes sense mathematically because we took those reciprocal rates down to 10% flat across the board. The majority of that 500 million probably came from China because they have 145% tariffs. And so now it's going to be a question for the market to figure out, okay, we lost 10 trillion in stock market value. We collected 500 million in tariff revenue. Was that enough? Tesla right here. There you go. Below the lows of the day, 238.81, down about 6%, getting a little bit of a green candle bouncing from 238.42. But all of these names seeming to violate their intraday lows that we had about 20 minutes ago. Robinhood as well, down 8%. NVIDIA, 10% down on the day. There she goes. There she goes. 81 cents away from going below 100. Below 100 based on what we're seeing right now. This is a hell of a market, dude. Absolutely hell of a market. The probabilities on a rate cut going into May also have decreased. Yeah, 15% now. So those have started to come down. June probabilities are still at 58%, but May is now down below that 17% range. Amit, when shall we be rich again? I don't know, dude. You know, and again, this is the nature of this market, right? Friday, it was green. We ended out the day. Everyone was happy. You could have a good weekend. And then you just never know what you walk into on the next morning, which is why it's really hard to trade this market. And quite frankly, it's one of those markets where I don't think the expectation should be gains. Maybe the expectation is preservation of capital and allocating capital to buy the dip on amazing American companies that can outperform. But the expectations of gains is a bit muted. Again, I am still bullish on 2025 because I think Trump can end the trade war rather quickly and expectations can reverse. Maybe Q2, Q3 earnings sucks, but Q4 is good. So we can price that in. We can start moving higher. We probably don't have to get to 6,700 on the S&P, but could we get back to 6,000? Yes, I think that's possible. It's just right now, that's not what we're seeing. You guys are blaming me because I looked at the Saratoga water at 7-Eleven yesterday for all of this. I saw some of those comments. They're like, hey, even if you didn't buy it, you looked at it. And that's the issue. Maybe it's my fault. Maybe it's my fault again. NVIDIA right here, 100.82. Amit, why not sell puts on NVIDIA at this level? Yeah, I don't hate that. I don't hate selling puts here. I mean, $90 puts, $85 puts. I don't think that's the craziest idea in the world. It's just a question of, being okay with being assigned at those levels. Here's another headline that you guys are not going to like, but I saw this today and it is what it is. I thought it was kind of weird, but Trump Media has now launched new investment accounts comprised of stocks rooted in American values and priorities. Trump Media, or DJT, operator of the social media platform Truth Social, the first streaming platform, and the fintech brand TruthFi, today announced that the three firms have created a strategic partnership and launched a new suite of Truth Social branded separately managed accounts, SMAs. These investment strategies offer investors access to curated thematic investment strategies rooted in American values and priorities. So Truth Social, which is the social media company underneath TMTG, which is Trump Media and Technology Group, that's the parent company, is partnering with a couple of other companies, Index Technologies and America First Asset Management, to launch ETFs, is what it looks like. And the ETFs will be filled, NVIDIA now down 10.3%, with American companies that embody American values, and people can buy into them if they would like to do. So how is that legal? That's a hell of a question. How is it legal for Trump's company to launch a literal ETF filled with stocks that, whether he's handpicking it or not, it's his company, so it's associated with him? I don't think any lawyer has to go through too much of a stretch to make that argument. and then promote those ETFs to the American people as the most powerful person in the United States of America. Yeah, I would say that's a little illegal. But then again, I also thought the Trump meme coin was a little illegal. So, I mean, at this point, who's going to stop him? Who's going to stop him? Again, that's not affecting what's going on with NVIDIA or JPOW right now, but it's just seeing stuff like that. Obviously, people, especially if their portfolios are down, it's something that they'll probably not be the most fond of. Tesla right here, 238. It looks like it's about to go below 238. Oh, wow. We hit 237 already. Bounced off 237.76. Netflix right here down 2%. Google down 2.2. NVIDIA down 10.15. And then Robinhood down 8.3% on the day. Amit can stop him. I cannot stop him. I cannot do anything. I mean, look, at this point, he's got power. And I'm not saying that other administrations haven't done corrupt things with their power as well. This is just a bit explicit, which is what we're seeing in front of us. But yeah, it is what it is. It's happening. And there's not much we can do to resolve it. The only thing I think that the market cares about now is getting clarity on tariffs. And, until we get that, it's going to be a while until we see how this plays out. Let's get an update on NVIDIA, and then we'll move on to a couple other headlines. We got some OpenAI related news that we'll get to in a second as well.
Try to make sense of all of this. Christina Partsinevelos joining us. Now, I understand there's like export controls and fancy words, but the reality is the market did not see this coming.
To a certain degree, the restrictions were actually expected. We just didn't know it was going to be $5.5 billion write-up. But their news actually gets worse, Brian. And I say that because now the House Select Committee on the Chinese Communist Party has launched its first ever investigation into the chipmaker to determine if it knowingly provided critical AI technology to Chinese firms in violation of export controls.
That's new. That's new today. That's new. China's investigating NVIDIA to see if they knowingly provided chips beyond export controls. So that's not just the United States. That's now China joining the investigation as well.
According to the New York Times. And this development actually broke, Brian, in the past hour. And I can confirm that NVIDIA had previously appeared before Congress to answer questions on this matter. So this is additional scrutiny. And that's why you saw the stock drop even further to 10%. NVIDIA was already trading lower after we talked about announcing that $5.5 billion Q1 charge following new U.S. government export restrictions on advanced chips to China, including the H20s. So this means that all the upcoming NVIDIA Blackwell products are also unlikely to meet compliance thresholds for Chinese markets. NVIDIA will have to seek out licenses.
Oh boy. Now that China, this again, you just heard her say this broke in the last hour. Now that China is engaging in the investigations as well, this is basically China trying to say, hey, you guys thought you could use the H20 chip as your leverage. What if we investigate NVIDIA and now we make it even harder for NVIDIA, which is an American company at the end of the day that affects all of us. So China, I guess, to some extent, trying to find a way to not let that H20 chip be the only reason to give Trump more leverage when it comes to export controls.
Evercore ISI reports conversations with NVIDIA's CFO revealed limited market expectations for these chips outside of China, and H20 production can't be easily shifted to Blackwell because of different manufacturing lines and processes, which is why you're seeing such a large write-off. While China, though, does contribute about 13% of total fiscal 2025 revenue, it's the lowest level in a decade. So Wall Street right now, a lot of the sell side are cutting estimates. Morgan Stanley right now indicates these license requirements will reduce data center revenue by 8 to 9% over the next few quarters. So definitely a hit to revenue. Meanwhile, Trump's new export controls really could significantly boost sales for Chinese domestic manufacturers led by Huawei, which has been aggressively developing its own AI processor. So a lot of news for NVIDIA today, Brian.
Yeah, there really is. And it's something that the market clearly is surprised, Christina, because NVIDIA stock is down 9.8%.
That's also because a week and a half ago, there was a report that Jensen Huang successfully convinced President Trump to not ban these chips. And so now we know that that's not true. And it seems like the administration is not going to back down. So who else will be next? AMD said that they're taking an $800 million charge. Broadcom could be next, given their relationship with ByteDance. We could see Marvell in the mix, et cetera. So it's really weighing on the entire sector.
It really.
Well, yeah, I mean, this is obviously not the best in the context of NVIDIA right here. 101.02, bouncing a little bit from that 100.5 level, but still down on the day. Meta down 4%, Palantir down 8%, Robinhood down 8%, Bitcoin holding kind of green, which is actually good for Hood, but it's up slightly on the day. S&P down, new low of the day, 523.50 currently right now. OpenAI headline that we got today. OpenAI looks like they are trying to buy a company for $3 billion. The company's name is Windsurf. Has anyone heard of this company? Apparently, it's an AI coding company. OpenAI said to be in talks to buy Windsurf for $3 billion. Yeah, I've never heard of Windsurf before, but that's pretty aggressive. Oh, Codium is the company. Windsurf is the product. Codium is the company. It looks like it's the Windsurf editor is built for the way AI is meant to work with humans. Everything you love in Windsurf, extensions and more, with unmatched performance and a user experience that keeps you in the flow. The Windsurf editor is where the work of developers and AI truly flow together. It's one of those products that helps you code without having to literally code. You can kind of like prompt engineer the coding. That's what I think this product does. Cursor alternative, right? It's a cursor alternative, correct? AI coding, yeah, there you go. So $3 billion to an AI coder is where they're spending the $40 billion they just raised from SoftBank. So we're seeing some startups get exit liquidity through OpenAI. And obviously it looks like OpenAI wants to continually enhance the suite of AI tools that they're offering, now joining the AI coding race. I mean, people use ChatGPT for AI coding, but it seems like these AI companies that are hyper-focused on just the ability to code with AI are more prudent than a Grok or a Claude or a GPT by themselves, given those are much more broad-based large language models. Webull, by the way, down 15%. That one's getting hit. Robinhood down 8%. Palantir right here down about 8.3%. Currently right now. Wow, looks like some of you guys have used Windsurf. Yeah, I've never used that, but I didn't even know there were that many Cursor alternatives. Cursor is getting valued at, I think, $10 billion, and they're doing $200 million in revenue. It's one of the fastest growing companies to get to $200 million in ARR. But it looks like that niche of startups is starting to get a lot more attention. Okay, I said I was going to close the stream at 4 o'clock at the market close, but the White House just tweeted that we are having a press briefing at 4:30 p.m. with a special guest. All right, so it's like another 5-hour stream. Is that who's the special guest, bro? Why do they go live more than streamers, bro? Why do they do this? The White House freaking loves going live. Like, they just love this shit. Biden freaking went live maybe like 3 times in 4 years. And Trump does 3 times every day. Oh, you know what it might be? Imagine it's Japan and Besant, the Japanese prime minister, and Besant kind of announcing a deal. Maybe I'm reaching way too far here because they just started negotiations today. But if that was the case, that'd be pretty cool. I think it's going to be Trump. I think the special guest is Trump. I think that's what it's going to be. It would be nice if it was imagine it's Japan and they announce the deal and it's like some amazing deal and the tariffs go to 0%. I mean, like after hours, markets would love that. But I mean, who knows if that's what it's going to be. It's Dan Ives. Oh my gosh, could you imagine, bro? Dan Ives shows up. Dude, that would be hilarious. Imagine Dan Ives. Yeah, guys. I'm just here to say it's not 9 p.m. at the party. The party's canceled. Imagine that's what he says. Wow, S&P 520.278. New low of the day as we head into power hour, down 2.75%. Almost 3% down in the day. Yeah, it's going to be Tom Lee. It's going to be Tom Lee saying, hey, guys, I just want to let everyone know that this administration is trying to uphold the core covenants of capitalism. But unfortunately, it's not working yet. Yeah, the Japan deal would be in the Oval Office. That's fair. They wouldn't do it in the press briefing. Who do you guys think it's going to be then? Maybe it's just Trump and he just talks to the media, but like that's not really a special guest. They're teasing some type of announcement. Tesla, new low of the day. AMD, new low of the day. Netflix, down 3%. Celsius, even Celsius couldn't withstand this. Down 2%. Reddit down 4%. Uber down 2.3%. United Airlines, which had a really good earnings yesterday, down 1% after being up 7%. American Airlines down 5%. That one's getting hit. MP, Materials Corporation, the only one that's up right now, 9.4%. Based on those rare earth mineral headlines. How's Fartcoin? That's a great question. Fartcoin. I'm starting to think this is a clown market, dude. I really am starting to think it's up 11%. So that doesn't mean I'm getting out of this market. It just means that this is stupid. This is like this and, you know, Newsmax and Webull. This is just getting ridiculous. It's getting to the point where I'm gonna buy some damn Fartcoin and like that. Let that be my freaking hedge. Robinhood needs to list Fartcoin, bro. I don't even know how to buy Fartcoin. Where do you buy this thing from? Robinhood needs to put this on the platform. Maybe that'll be our real hedge. No, I'm just kidding. But in all seriousness, it's obviously weird. I think that the broader sort of philosophical thing is that people are leaving big tech to speculate on stuff that is, you know, something you probably shouldn't speculate on, like meme stocks and meme coins. But it's because people are fed up with the current state of the markets. And I think that's how it's playing out right now. Got a generation of people that just don't care about being in these markets. Did you buy Nvidia today? No, I did not buy any Nvidia today. I probably should, right? It's down 10% on the day. Like, if we're not going to buy the dip here, when are we going to buy it? Probably when it goes to 90. All right, screw it. We're going to buy 10 shares. It's down 10% on the day. Like, I don't know. I feel like on 10% down dip days you buy. All right, here we go. We're buying 10 shares. There we go. It's done. It's done. It's done. It's done. Maybe this comes to 95 later, but 101.29. There we go. All right, we bought the dip. We were patient in the morning. Maybe we get the bottom. Maybe not. We'll see. Anthony Noto recently just did a podcast, and he said he had some choice words for Robinhood. Here's what Mr. Noto, who doesn't do a lot of podcasts, had to say.
More elated knowing what's in store for us in front of us in terms of cryptocurrencies.
What do you expect fintech to look like 5 years from now? And how does how does AI play into that?
Well, first, I think fintech, just like retail and travel and media, is going to be a winner take most area. And that means the digital companies, the winners in the digital world, in the technology world, will take most of the riches. I think it will differ by category. I think SoFi is positioned to be the winner that takes most in the one-stop shop. Robinhood is positioned to be the best in taking the most in just pure brokerage and trading and investing. You know, what they do outside of that is yet to be seen. You know, I think Affirm is great at buy now, pay later, but there's also Klarna and Block in that regard. But I think the companies that are leaders in their specific sectors today will end up being those leaders in the future.
All right. So Noto saying SoFi is going to be the leader when it comes to the one-stop shop, and Robinhood could be the leader in brokerage. So he's kind of admitting that Robinhood's the winner in brokerage, but whatever they're doing else is yet to be seen. There was another quote that he said that someone told me about in this pod, that if you're a SoFi investor, you have to get bullish when you hear it. Oh yeah, here we go. Here's the quote. All right. So listen to what he says right here about the future of SoFi. S&P, wait, hold on. Before we go to that, S&P, are we down 3% officially? We are down. Yeah, new low of the day. Not 3%, down 2.8, but 522.3. Nvidia still not at its lows, 100.45, 101.2, but S&P getting dumped a little bit more. All right, here's what Note had to say about SoFi.
Can't share a big, hairy, audacious goal or BHAG for SoFi, because if I do, then others are going to copy it.
Okay.
But what I will reiterate, which will ladder up to the BHAG, is that we want to be a top 10 financial institution measured by market cap in our country. We want to be a top 15 technology company measured by market cap. Those are long-term aspirational goals.
Mr. Anthony Noto just said he wants to be a top 15 technology company in the United States. Well, you know, I would probably disagree with his ambitions to get there. I'm happy he's that ambitious. Quite frankly, I don't think that's going to happen. But I guess you have to have the ambitions, right? To the reason I take that as a joke, and I'm sorry, but like, come on, bro. Come on, dude. We can't even sell covered calls on the SoFi app. You want to be the top 15 tech company. And like, even if Robin had said that, that's very ambitious. And maybe Robin could pull it off, but still, Robinhood's a fintech. Like, the TAM of tech companies is way different than the TAM of fintech companies. So this goes back to my point around Noto. He talks a lot of big game, and the execution really is weird to get there. Also, that, you know, this part was also really weird. They asked him what's his like big goal, and he says he doesn't want to say it because he's afraid people will copy him. Even that part, I was just like, what? Like, you're afraid of people copying you? Listen to what he said right here.
Currency.
All right. Well, that was the end of our regularly scheduled programming. Now we do a couple creative segments. These are lightning round, quick answer stuff. The first one is called The Word. You've said before that strategy requires having a BHAG, a big, hairy, audacious goal. So in one word, what is your big, hairy, audacious goal for SoFi?
I can't share a big, hairy, audacious goal or BHAG for SoFi, because if I do, then others are going to copy it.
Dude, what? What? Is this third grade? You're afraid of people copying your homework? What? Like, I'm sorry, guys, to all my SoFi people. I'm sorry. I still have my SoFi options, but are you telling me you're afraid to state your ambitions because you're afraid people will copy it? What? What are we doing, bro? I don't know, dude. I don't like it. Everything this guy does whenever he talks, I really don't see it. I don't see the vision. It doesn't make sense to me. I continue to hold my options, but S&P right here, down almost 3% of the day, down 2.93%. But come on, bro. Come on. You're afraid people are going to copy. What are you talking about? And then right after you say that, you say we want to be a top 15 tech company. So you say something that makes you sound like you're scared, and then you say something that makes you sound like you're way too cocky. It's like, that's just both combinations of that put together. I'm like, what is this guy saying, bro? What is this guy saying? And then he's doing a podcast with Liz Young, but he will refuse to do a podcast with the millions of SoFi investors that deeply care about his company. I mean, I don't know. It's not interesting to me at all. I still remain bullish that the company can do well. I think $20 by the end of the year is possible if the loan platform scales, but I really am not a fan of just how Noto engages in this stuff. I think it's kind of ridiculous. Nonetheless, that's what he had to say today, and we got that new podcast. We'll probably get some more clips later and see what he has to say. By the way, I think Tanner hearing that would cringe as well. Given how public Vlad has been and how like strong Vlad has been in terms of what he talks about, like, I think Tanner would be like, what? Like, why are you afraid that someone's going to copy what you have to say? Robinhood right here, down 8.6% of the day. Palantir down 8.5. S&P down 2.91. It's trying to bounce at 521. Wow, S&P's down 15 points on the day. It's a big hit. Big hit on the S&P 500 currently right now. Where's the quantum names and the spec names? How are they doing? QBTS down 9% on the day. Rigetti down 7% on the day. GameStop down 3% on the day. MicroStrategy is actually only down 2% because Bitcoin's been holding up. But all the spec names getting hit. Where's Big Bear AI? We haven't looked at that one in a while. Big Bear AI down 5%, $2.40. I think this thing was close to $5 early in the year. That one also getting hit as well. I don't hate SoFi. I do not hate SoFi. If I hated SoFi, I wouldn't own any of it. I'm very confused with Anthony Noto's leadership style. That's more of my opinion right here. I don't hate SoFi. I think it's a great company. I really think the way this guy thinks about investing and the way he thinks about like brand and retail investors, it's like a wonky way to think about it. And the examples, Palantir and Hood, are right in front of him. All he has to do is copy it. but he's choosing to go this different corporate direction. And so it is what it is. Palantir goes under 90. There you go. 89 now. SoFi 1044. That's down 4%. S&P officially down 3.05% on the day. This is now power hour, folks. Either the bottom falls out or we recover a little bit in the next 40 minutes. 521 on the S&P, down 3.07%. We are seeing some real pain. Meta is under 500. Let's get a little bit more coverage on this, and then we'll keep going from there.
Is so critical, because what it shows us is really a couple of things that I think the market is digesting. First, if everything's a 50-50, as Steve is describing, then news like this in either direction can whipsaw the market, upside and downside. I think second and critical is that even if the Fed were to step in with a rate cut, what good does that do to clear supply chain tensions? It does very, very little. And third, what the Fed does is becoming more and more divorced with what's happening in market interest rates. So with inflation expectations on edge, certainly near-term inflation expectations de-angered, if the Fed's cutting rates in that environment, then you might still see market rates move higher, like the 10-year yield move higher. That's so challenging for real purchasing decisions in the economy. And so investors are seeing this and saying, wow, if the Fed's stuck, we're stuck too.
Now, Chris Harvey, including the other day, you have been resilient in yourself of sticking with your idea that we could still have a really good return this year in the stock market. And I thought you articulated your views very well, whatever it was, three or so days ago that you were with us. Market doesn't like what it heard from the Fed.
No.
How does this all factor into the way you're thinking today?
So, Scott, what I think you need to do for the next, let's just call it 3 months, market's going to trade in 5-6% increments. It trades up and your portfolio is not doing so well, you need to take risk out. It trades down, your portfolio does well, then put a little bit more risk on.
We need to be that tactical. That's hard for people.
It is hard for people. So if you don't like it, then take the risk out on up days, wait until the second half of the year. I think you're going to have a lot more clarity in the second half of the year on tariffs, on the Fed, and the economy. And what I see is a Fed that's cutting rates next year. And the important thing is, if we go into a slowdown or a recession, there's a difference between a recession that's caused by exogenous shock, which is what we're seeing, and one that's caused by balance sheets that are upside down and backwards, which we are not seeing.
What if it's caused by the hand of one person?
Well, that's the exogenous shock, right? The exogenous shock is we don't know. We don't exactly know what we're handicapping, the degree of tariffs, the timing of tariffs. So markets are rightfully so being a little bit skittish in pricing and risk. The other thing that you're seeing in the bond market is they're pricing in confidence and credibility issues, something we haven't seen in a long time. U.S. is still a very high quality entity, but now there are questions about how high quality and what premium we should put on that. And so when you wrap all these together, you're still going to get a lot of volatility. If you're an institution, you can't just walk away. What you want to do is protect your portfolio with some sort of low vol, but you also don't want to put your head in the sand. There are still some good risk rewards out there, and you want to slowly start taking advantage of some of these sell-offs because
I think this is why the analysts are having a hard time dealing with this market as well. Like, you want to de-risk as much as you can. That's kind of your job as a money manager, to mitigate risk. But you also know that on a flip of a dime, like, this market flips. Tariff rates get walked back. We get some new deals, yada, yada. And so, like, yeah, the sell-off is aggressive, 2.82% of the S&P, rebounding a little bit from that 520.86 level. But you also know things can change so easily, which is why I do feel like by the end of the year, the buy the dip strategy will work and will play out. But you just don't know when. You just don't know when this ends up playing out. And I think a lot of even the most bullish of analysts, like the Tom Lees, the Dan Ives of the world, they're realizing that obviously there's no way we can predict this. And so the job as an analyst is to give your clients the best advice that you can. And some of the best advice is stay long, but also hedge as you're staying long, because you just don't know when this flips or when this changes. Now, granted, I haven't seen a lot of analysts say get out of the market. And I read a lot of these sell-side equity reports. None of them are saying leave them. Outside of Bank of America, I should correct myself. Bank of America did say yesterday, short the S&P. They did officially say that. And they're expecting 0 rate cuts this year. So the other firms have lowered their S&P targets aggressively, but they haven't said go short. You know, they're still maintaining the mirage of like something bullish playing out in this narrative switching. Bank of America straight up said short the S&P 500. Now, maybe Bank of America is going to be right. I think they're going to be wrong on the rate cuts as long as the tariff stuff gets walked back. And I presume they'll be wrong on this short. But it's going to be one of those things where the majority of people are going to have to figure out where do they think the direction of tariff policy is going. And that seems to be controlling pretty much everything right now in this market. S&P down almost 3%, still 2.8. NVIDIA down 9.5. At least it's bouncing from 100, 101.48. I think we bought our 10 shares at 101.29. But we are down about 9% of the day. Palantir as well, down 8.5%, just hovering a little bit above 100 right now. Yeah, Bank of America said, I was surprised when I read that yesterday. Bank of America said short the S&P 500. And granted, I think they were going to do this anyway, because for the past 2 months, they've started to get more bearish. And I could tell when they said no rate cuts. So this is not surprising that they officially said it's time to go short. This is the headline right there. By the way, we have something else that came out from the White House that I thought was really interesting. So I don't even know necessarily how to make sense of it, but yeah, here it is. The White House said today, I'll just show the screenshot right here, but this is what they said. I'll put the link in the chat if anyone wants to see this. They put out this thing on the official whitehouse.gov website. And the 13th director of the White House Office of Science and Technology said, Tesla 235, wow, it's getting hit. Our technologies permit us to manipulate time and space. They leave distance annihilated, cause things to grow, and improve productivity. So a lot of people are freaking out about this, of just like, wait, does the White House have some fancy technology that we don't know about? Manipulate time and space? Are we dealing with the space-time continuum here? I have no idea. I don't know if he was being funny here. This was remarks by Director Kradios at the Endless Frontiers Retreat. It was posted this morning. And yeah, he said we can change time and space. So maybe it's Palantir, bro. Maybe they're talking about, maybe that's the Palantir Doge connection. They saw into the matrix that is Palantir, and they were like, you know what? We can legitimately control time and space. That might be what's happening right now. S&P 500 right here, down about 3%. Back down to 3.01% on the day. Tesla's at 235. Tesla 235, down 7%. Meta's also getting hit below 500. Yeah, there you go, 497 on Meta. S&P 2.95, NVIDIA 9.7, the Q's down 4%, Palantir 8.6. Interesting stuff to see how this is playing out. Is everyone in the government wearing tinfoil hats? Oh my gosh. Can they take my portfolio back to January levels? Yeah, if they have a time machine, I would love to go back to February 19th. I'll take some profits before we get back to April 16th. Wild market, absolute wild market. I think we got another headline here around China. Oh, we got a Besant tweet. Hold on. What is Besant saying? What is Besant saying? He's saying something about China and Iran, I think. Let me just pull this up. He says the Trump administration has made one thing clear. We will apply maximum pressure on Iran and disrupt the regime's oil supply chain and exports, which support terrorist proxies and partners. Any refinery, company, or broker that chooses to purchase Iranian oil or facilitate Iran's oil trade places itself at serious risk. We are prepared to take all actions available to get Iran's energy exports down to zero, where they belong, and keep Americans safe. Is he trying to say China importing oil from Iran is going to be a way they, I guess, try to negotiate? Is that what he's trying to say? China, Iran? Yeah, I think that's yeah, here you go. 4 hours ago, US sanctions another China teapot refinery for buying Iran's oil. Yeah, this tweet is a direct response based on what they're saying. Check the next tweet. Is there a link here? Oh, there's a link. Hold on, let's go to the link. Yeah, oh, there you go. There you go. Yeah, this makes sense. Today, the Department of Treasury Offices of Foreign Asset Controls is designating a China-based independent teapot refinery for its role in purchasing more than $1 billion worth of Iranian crude oil. Wow. Dude, talk about a trade war, man. Holy crap. China is getting hit from every angle. Obviously, they're hitting us from a lot of angles as well. But NVIDIA, Iranian oil, Vietnam, Thailand, a lot of these countries that China's visiting this week as well. It's all going back and forth. All of them going back and forth. 2025, baby. 2025. Yes, Alex Karp did make Time's 100 most influential people. That was some good news today. It was nice to see Karp get some recognition there. Tesla right here down 7%. Meta down 5%. S&P still down 3%. NVIDIA down 9%. Hood down 8%. Palantir down 8%. Bitcoin still somehow green. Again, I got to give it up to Bitcoin, dude. I did not expect, like when the NASDAQ falls 3%, Bitcoin should be falling 5%. It's always traded at a significant alpha against the NASDAQ. Over time, it outperforms. But if you look at 2022, NASDAQ fell 37%. Bitcoin fell about 45%. So the fact that it's not trading as aggressively to the downside is I don't know, it's kind of exciting, but obviously it's a hard market to even figure out where it's going to go. VIX right here, 3390, that's up 12.5%. The VIX continues to go higher. Yeah, Bitcoin potentially decoupling. Are we trying to start a conflict? I don't think we're trying to start a conflict. Like in my heart of hearts, I don't think we're trying to start a conflict. I think we're trying, I know everyone's going to hate this word, but negotiate. Now, the way they're negotiating is incredibly aggressive. And there's parts of this that I don't think are going to be that effective. I don't know if it's going to work. Granted, I'm not running the country. But the byproduct of what we're doing, could it start a conflict? Yeah, I mean, who knows? It could. I am hoping that it doesn't, but obviously eventually we're gonna have to see how this plays out. At 4:30, we're having this special press briefing that the press secretary said with some special guest. No one knows who the guest is. Elon Musk is the special guest. I don't know. I don't know if it would be Elon here. But we're gonna have to see what they say. I'm thinking it might just be Trump, but I guess we'll find out in about an hour. Let's get a little bit more coverage right here. It's Karp. If it's Karp, that would be amazing, but I don't think it's Karp. It's Hulk Hogan, dude. You guys are the funniest guesses.
Under a 2 percentage point bump up in the inflation rate. I just have a hard time thinking that the Fed is cutting into that. I mean, I've said this several times, that when the biography of Powell is written, it's going to read a lot more like Paul Volcker than it is Arthur Burns, which means I do not believe this Fed will countenance a rise in the inflation rate in monetary policy. I believe they will lean against it. So I can't say enough that I think the market is overly optimistic about an imminent or near term, even the next couple months rate cut.
Wouldn't that be something, Lauren, if Powell, I hear Steve, and he knows more about this in his pinky than I do in my two hands together. So I get that. But if the Fed chair was forced to make the bet of all bets, if the labor market starts to deteriorate, but inflation ticks up a little bit, but he still convinces himself that it's going to be transitory, that it's only short term, whether they would make that bet and put it on paper through a rate cut?
The swing vote in that circumstance, if the Fed's mandates continue to move in the hard data in opposite directions, is going to be financial conditions. Because what financial conditions can help the Fed to assess is, look, the data right now, especially the data of the last couple months, Steve's right, it's not going to be rapidly deteriorating because real economic conditions haven't had time to really reflect any deterioration. We don't know that that's happening. So what financial conditions will tell us is how is the market digesting the outlook for inflation, the outlook for employment. And if financial conditions are deteriorating to a point where you can't access liquidity, you can't, finance yourself as a company in this economy, then the Fed might be more interested in acting. But I'll say this, here in the next couple months, I agree with Steve, even if financial conditions are deteriorating in that way, it's really difficult for me to see the Fed using interest rates as the way to address that situation, because there's very little that a lower policy rate can do to...
She's right. Policy rates take about 12 to 18 months before the economy even sees the effect of that. So unless we do quantitative easing, which Jay Powell basically said we're not going to do today, the rate cut is nice to have, but it really needs to be coupled with trade policy that is not as aggressive in terms of what it would do to inflation expectations.
Stave off supply chain disruptions. Financial conditions, on the other hand, there are ways that they can step in, whether it's with liquidity. I think only in an emergency situation and temporarily would they use bond buying, but we might see those tools used first before the policy rate.
Well, I mean, they clearly believe that their toolbox is bigger than just one item in it. It's a large item, obviously, but I think they believe that they have other things at play. I alluded to the fact of your S&P target is still, I think it's the highest as it currently stands on the street. And you made your case as to why you think even if we don't get to that number and it's just a number, we can still have a good go of it. It's 7,007 is where you stand. Can we get there without the Fed?
Wow. Someone still has a 7,000 target. All right, there we go. Someone still is pretty damn bullish.
We can get there without the Fed. So the way we get there without the Fed is we get agreement in North America, in large parts of Asia, in Europe on tariffs. Again, the economy was in a pretty good spot where we were before. Second half, one of the things that we've talked about is M&A activity and IPOs. We can see that start to bubble up. You start to provide more confidence, right? People will expect the Fed, if inflation, what's driving inflation is tariffs, then that fear should start to come down. Rates should start to come down, and that should start to push equities up. And what we're seeing in the first part of earnings season is underlying fundamentals are okay. And as you were talking about, there's just a ton of uncertainty that people are dealing with.
Well, what if we're learning in real time that both the Trump and Fed puts are much lower than we thought?
Yeah.
And that it's not the stock market that's going to initiate it. Like the only reason that people suggest they pivoted the way they did now, because the bond market was screaming at them to do something. But let's just say, for argument's sake, the bond market remains calm.
Yep.
Rates either remain where they are. They don't start, getting out of control like they look like they were doing. The rate of change was so dramatic in a handful period of time. But let's just say that the bond market remains calm. So that's not a forcing mechanism.
Right.
But that the equity market, we've learned, needs much more downside. Steve said the Fed wasn't going to react to a falling stock market. Maybe the president isn't either.
So let's just talk about the Fed one more time. Okay, so it's in the Fed's best interest to do what they did. They should be hawkish. In the past, they've pivoted too early, right? As Draghi said, the power is in the promise, right? If they continue to be hawkish,
Isn't he the one who also said, we'll do whatever it takes?
He did say, we'll do whatever it takes. He said that.
Big promise.
You forgot about that one.
yeah. Always call me out, thanks. I appreciate that. But what happened today? We had some bad news about NVIDIA. We had people thinking for some reason the Fed was going to be dovish. They turned out to be hawkish. Fed's doing its job, right? Its job is to bring down inflation. One of the ways you do that is through communication. They're communicating we're still going to be tough on inflation. And now the market's taking this and it's a little bit upset by that. That's fine, right? Because what we're seeing from the bond market is, hey, we're not as worried about that. What we're seeing from the market in general is, yes, we think the Fed is going to start to cut and ease three or four times, maybe 4 times the second half of the year, and that's good. So overall, I think we're in a decent spot, but if you can't stand the volatility, either start bringing in the risk in a large degree because it's not going away, or just go to cash.
Look, his argument for 7,000, although the target sounds crazy, the argument is pretty simple. It's just Trump walks back all this tariff stuff and inflation comes down, we're good to go, which is like, it's a really simple argument. It's just given every headline we're seeing every day, it doesn't look like Trump is anywhere near necessarily getting rid of the mandate that he feels he has towards what seems like the new world order when it comes to decoupling with China and then walking back down the tariffs. Again, the negotiations on deals, hopefully those are productive and maybe they lead to a China deal, but it might take longer than expected. S&P 500 still down 3% on the day. Market will be up after hours. You're hearing it here first. You know what? There is a world. I'm just going to say this right now. I'm not going to do this, but I think there is a world in which we see this. There is a world in which this special announcement that's happening at 4:30 in the press briefing room could be so bullish that some people that might know exactly what that special announcement is, just like they magically knew about the 90-day pause before it happened. Who knows? Maybe they're buying a crap ton of zero DTE expiring calls for tomorrow. I mean, like theoretically, right? We've seen this happen 2 times now in the past couple of weeks where people knew either the market was going to tank, like on April 2nd, or people knew the market was going to rip after some type of Trump announcement, and they loaded up. One guy was up 74,000% on his calls after Trump announced the 90-day pause, and we had that S&P 500 10% intraday rally. I mean, maybe there's a world where people are loading up right now because they know at 4:30 what's going to happen, and we see a massive pump. Or maybe it's going to be a nothing burger, but I don't know. We'll see. It's coping. Well, it's not. I mean, I'm not buying any expiring calls or anything, but like we've seen it happen 2 times in the past week or the past 2 weeks. So, I mean, but it's a sad state of affairs that I'm speculating on insiders in the Trump administration that could be potentially buying calls because they know there's going to be some juicy announcement coming soon. Like, it's sad that that's where it's gone to, but it's hard to say that might not be a thing that's going to happen. At 4:30, there's going to be a special press briefing with Caroline Levitt and a guest. We don't know who the guest is. Bsoft, thanks for the $5 super chat. He says the special guest is the Penguins. They made a deal to avoid the tariffs. Yeah, maybe it's them. My best guess, which I think is a little bit better than those who are saying Hulk Hogan in the chat, maybe there's like a Japan announcement that is bullish. Maybe they get like the Japan Ministry of Commerce secretary to like say something positive. I don't know. Maybe it's Zuck apologizing. Oh my God. Could you imagine? Dude. Oh boy. Oh boy. Oh boy. The guest is Steve. Yes, it's Steve. Of course. That's why Steve's busy today. He's at the White House. Dude, imagine it's Jensen. That would be kind of cool though if it was Jensen. All right, so here's the question. When they say special guest, do you guys think it's like special, or are they just saying that word to get us excited to watch it? And then it turns out to be some like, I don't know, some random dude from some random place that no one actually cares about. Like, do you guys think it's actually going to be something where like, oh, wow. Or it's going to be like, okay, you just hype this up to get eyeballs. By the way, the NASDAQ right here on track for its 5th largest daily point decline in history, down 746 points on the day. You guys are saying hype? Hype. Yeah, see, the reason it can't be Japan, I think, even though I want it to be, is because they just started negotiations today. So how would it be Japan? Unless it only took them a couple hours to negotiate. Like, I don't know, negotiating probably takes, when you're navigating trade policies between entire countries, I feel like that's going to take more than a couple hours. I don't know. I wonder who that would be. NVIDIA, 101.80. We didn't get the actual bottom, but we got 101.2. Maybe that ends up holding for the day. We still have 25 minutes left. S&P 500 down about 2.94%. Robinhood down 8%. And then Palantir right here Down 7.7. So we're not at the full lows of the day, but still an ugly day that we're having. It doesn't actually have to be a deal. It can be a symbolic victory. Yeah, that's fair. I think at this point, the market would take any level of symbolism it can to be excited. It's Chris. Dude, Chris, I think is... Let me see if I can call Chris. Let's see if he would pick up. Based on Chris's tweets, I think he's pretty pissed off about everything going on right now. But I think he still believes that this market is salvageable. Oh, no, he can't talk. He's in a meeting right now. He can't talk. Chris also has a day job along with Steve. Dude, all of you that are working from home right now, what? Okay, so we have an hour and a half until the shift ends, right? 5 o'clock, 9 to 5. You guys have not done anything all day except see yourself lose more money. That is a fact. And I get it. I get it. It's hard to work when you're losing that much money every single second. Zoom is down. That's your excuse? Zoom is down. Yeah, dude, no one's working. No one's freaking working. Everyone's just watching the market tank in front of them. Shout out to Davis. He's at the hospital. Me listening. Davis works at the hospital. He's listening from the hospital. Still not done losing on the Well, a lot of you are from Europe though as well, right? So it's like almost late night. S&P right here down about 4%. What time is it in Belgium? Time in Belgium. 9:30 p.m. Wow, so the market closes for you guys at 10 p.m. It closes at 4 p.m. for me on the East Coast of the States. And basically, oh, so your market closes 9 to 10 p.m. Huh. So my market closes in the middle of the day. Those in Europe, it's basically before you sleep, you see the U.S. markets close. Well, at least you get to close your eyes after losing all this money, right? Like, I still have another 7-8 hours before I sleep. So at least you guys get to take a nice little break after losing everything. Do we want to put how much we're down in the chat? Let's do that. How much are you down today? All right. At the lowest today, it was negative 61,000. Currently right now, 20 minutes before the close, it's negative $35,000 and $35,181.42. Now it's $39,000, $115.64. It was 60K, so a little recovery. Oh boy, there's some big numbers. 100K, 200K, 50K. Nick's down 1.5 million. Okay, that's a lot of money. Down too much. Yeah, that's probably the right answer. Lee's down 170K. Yeah, people are getting hit today. People are getting hit today. It's not as bad as April 2nd or April 8th when we had that really nasty decline. 6% down on the S&P, but still it's bad. This is basically half of that day though. NASDAQ down 4%. Today, if we end down 3%, which is basically where we are, 2.94, that is half of what we experienced on April 8th, which was worse than 9/11 and the dot-com bubble. So it just goes to show you how aggressive this day still has been. And again, if you're wondering why this happened today, Jay Powell said there's not a Fed put, which you can't blame him for saying that. And on top of that, the NVIDIA news pretty much got everyone upset because of the fact that it's being used as a pawn in the China negotiations, which the market obviously doesn't love in terms of that volatility. Let's get another update right here on the NASDAQ and NVIDIA as well.
Restrictions to China. Shares were already down all day. And then there was a new report within the last hour or so that led to another leg lower. What was it?
Yeah, it was a new report about a congressional investigation. The House Select Committee on the Chinese Communist Party has launched its first ever investigation into the chip maker NVIDIA to determine if it knowingly provided critical AI technology to Chinese firms in.
So again, that's the House Congressional Committee on the CCP is investigating NVIDIA. It's not just Washington, it's also China. So NVIDIA in the crosshairs of two major countries deciding that they want to investigate their chip practices.
Violation of export controls. This is according to the New York Times you're seeing on your screen, but I can also confirm NVIDIA has been questioned by Congress on this matter, but this right now is additional scrutiny, and that's why you saw the stock, you're seeing it hit session lows right now, down 10%. NVIDIA responding within 5 minutes ago, just on my phone, saying that from a spokesperson, they follow the government's direction to the letter, quote, if the government felt otherwise, it would instruct us. Our Singapore revenue indicates the billing address often for subsidiaries of our U.S. customers. The associated products are shipped to other locations, including the U.S. and Taiwan, not China. NVIDIA was already, though, trading lower, as you mentioned, after announcing a
Okay, you guys are saying it's the U.S. committee on the CCP, but not the CCP themselves. Okay, so that's a little bit of a different thing. So it's still an investigation by the United States. Yeah, the way she said that was kind of weird. It felt like she was saying from the CCP. Okay, so it's a House committee studying the CCP that's investigating NVIDIA for possibly selling chips to the CCP, probably through Singapore. So nonetheless, still an investigation, not literally through China, but through another House committee that's trying to stop NVIDIA from selling to the CCP.
$5.5 billion Q1 charge following new U.S. government export restrictions on the sale of these advanced chips to China. Evercore ISI actually put out a really interesting note this afternoon saying the CFO of NVIDIA doesn't see much market for those H20 chips outside of China, and that the production lines use completely different manufacturing processes, so they can't really be repurposed for Blackwell chips, which is this upcoming iteration. And so that's why NVIDIA had to write off so much, $5.5 billion. Morgan Stanley indicates these license requirements will reduce data center revenues by 8 to 9% over the next few quarters. AMD, lastly, also warning of an $800 million charge due to these license requirements, with the assumption that more are coming for Broadwell, Marvell. Overall, that's why you're seeing the chip sector down today. Scott?
Yeah, my bad, guys. I don't know why I heard it like that. It sounded like China was doing the investigation, but it's the House Committee on the CCP. Regardless, still obviously not good news for NVIDIA right here, as, again, that news broke in the last hour. So, I mean, I don't know how much more lower that could take down NVIDIA, given there was already enough bad news today, but they are seeing a little bit of a bounce. 102, there's your green candle from 101.3 to 102.3. Now it's down 8.8%. We have 17 minutes until the market closes. But NVIDIA right here is still down about 8% on the day. I'm going to cry myself to sleep. You know, the good thing about being long and not being super leveraged is that inevitably, if you're in the right companies, you know, the stocks tend to come back as the companies continue to perform the way that the way that they are expected to perform if they're really world-class companies. So I don't think it's worth crying about, but it's obviously annoying. And this is the point I was trying to make in the morning. Like, it's not about being emotional enough to the point where you just get out of the market, you know, and you can choose to do that. I just personally don't believe in that at these levels. But I think having emotions and being annoyed, that just means you're a human, right? Like, so for the people saying you're being too emotional or this is not, like, it's a human being. Like, if you're down $100,000 in a day, yeah, you're going to have some emotions. And one way to resolve that is to not look at your portfolio, obviously, but something I think all of us are having to figure out and navigate as well. But again, I still have the same belief that I just don't think this is a market you sell. I think if you're already still in it, then you stay in it and you hope there's a pivot right here. But again, the big headline of the day, and if you're just joining, you might have missed this. The Wall Street Journal reported that the U.S. is potentially in conversations with 70 other countries to work with them to figure out how they can isolate China. And the exact quote right here is the perceived goal is allowing, or is the United States trying to ask countries to disallow China to ship goods through their ports, which would, you know, cripple China's ability to not only sell, but gain access to a lot more GDP growth that they're trying to project right now. That to me was the biggest headline of the day. That is, I mean, if they're going the isolationist route with China, that's a whole different world that we're navigating with right now if they're serious about doing that. Remember when Besant said 2 days ago volatility has peaked? I mean, we haven't hit volatility highs for the year, but still 16% in a day. My goodness, dude. Volatility still up pretty aggressively right here. Where's oil? Is oil down for the day as well? Yeah, I think oil is kind of getting hit as well, but volatility right here up in there. Trading the VIX must have been, I mean, if you've been trading it correctly, up and down, and mainly it's been up. Obviously, this year has been very good to you. Oil's up 2% of the day, probably because of that news about us sanctioning a Chinese company from acquiring crude oil from Iran, Iranian crude oil. Yeah, it's up because of Iran. Yeah, that makes sense. APLD is up 17% today. They took a nasty hit yesterday or 2 days ago after earnings. We don't even have any earnings after the bell. Nothing crazy. I think there's like one company, but nothing big. APLD. Wow, 17%. All right. That one got a bit of a rebound right here. That one seems to got a little bit of a rebound. And then gold as well. Yeah. Now, the one good thing is that the 10 years is falling, which is nice. Like, that's the one silver lining in all of this volatility today, is that people are deciding to buy bonds in the midst of this volatility. Gold is surging higher as well, which is actually why it's kind of confusing why people are buying bonds if gold is surging this much higher. Like, you would think everyone would be just leaving to golds, but maybe Jay Powell's comments are getting people to feel that. You know the reason, because when Jay Powell said there's not a Fed put, he's essentially saying we're not going to turn on the money printer. And I think that's what the bond market cares about, right? They care about making sure if we buy bonds right now and we lock in this yield, it's not going to be inflated away by you turning on the money printer. So that could be the reason why yields started coming down, even though the lack of a Fed put allowed the stock market to fall. And maybe that's why people are going into bonds. Amidst being positive. I am trying to keep the positivity in the midst of the disgustingness that is this market. It's ugly, it's ugly, it's ugly, but at least we have our families, our health, our friends. You got shelter, you got food, you got water. Like, it's like, at least, when shit gets this bad, it's like, well, you still got to be grateful for all the other things we have in life. All right, here's Mohammed El-Iran. Let's get his take on what he thinks is going on in the context of the Fed.
And your willingness to come on and discuss this. What is your takeaway from what Chair Powell said? Because it has clearly had a negative impact on these markets.
It has, because he said very clearly there are no good news cuts anywhere on the horizon. That is, cuts warranted by low inflation. There are no bad news cuts on his radar screen because he's worried about persistent inflation. And then he brushed aside completely what I call the awful rate cuts, those that are prompted by market malfunction. So across the board, he said, look, there are no rate cuts coming for now. The stock market heard him. The bond market seems to ignore him, but I don't think it is ignore him. I think the bond market is realizing that this economy is going to slow quite a bit. So while I agree with Steve that
That's another good argument. That's another good argument. The reason yields are dropping and people are buying bonds is because they believe Powell when Powell says we're not going to cut just because of like the stock market, aka a Fed put, but we will cut if there is a massive growth slowdown, which he didn't even have to say that. We all know that's going to happen. But if there's a massive growth slowdown, then you should buy bonds right now, right? Because bond yields will come down dramatically when they cut rates when there's a slowdown, aka a recession. So that actually makes a lot of sense why yields are moving down today. They're essentially agreeing, in a nutshell, that there's a good shot we have a recession if these tariffs continue to be how they are being deployed.
Unlikely you get a June cut. What you're seeing in the bond market is real concern about the growth outlook, and that's why you're down 7 to 9 basis points in maturities up to 5 years.
Do you think the Fed's going to be, I know what he said, and I hear you, and I think your explanation sounds right. That's all fine and good until something actually happens. Are they going to be forced to do something, do you think?
So there's a game of chicken going on right now between the administration and the Fed. The Fed does not want to cut. It thinks that the policy problem is elsewhere. The administration would like the Fed to cut. I think the only horizon, the only scenario you get a Fed rate cut anytime soon is if we get close to what we had last week, which is bond market malfunction. You know, Scott, more than anybody else you know, there's a big difference between unusual volatility and malfunction. Unusual volatility you can get done at a price. You may not like the price, you may not like the bid-offer spread, but you'll get done. Malfunction is you can't, and therefore what do? You go do something else and you spread the disruption through the market. So only if we get back to where we were last week, market malfunction, will we see the Fed act anytime soon.
Right, but did we do anything to solve the method, so to speak, to the...
All right, we'll go back to that in a second. We do have a little bit of a pump as we get into the last 9 minutes. I think it could be a Hail Mary on some people thinking this White House 4:30 special press briefing, whatever, could be super bullish. Who knows? I don't think we have any other details other than there's a special guest. S&P goes from -3% to -2.4. Tessie 236 to 239. NASDAQ was down 750 points. Now it's down 550 points. And then NVIDIA 103. We potentially bottomed at 100.4. We got 8 minutes left to see if this ends up happening. Yeah, 4:30. We're going to see how bad it gets or if this is like a fake little pump. But I think that announcement is going to be important. Charles, thank you for the $10 super chat. This is the first time I felt fed up with all this. My discipline is waning. I've been patient, but I feel as though I've been put on the front line of a war I didn't sign up for. You know, you are right to feel that way, first of all. I think a lot of people did not expect to enter the markets in 2025 in this type of volatility, especially given the volatility in 2024 was to the upside. One thing I'll say is, like, if you're genuinely getting tired of this, it might just be time to like just tune out market news for a bit, even if that means not watching me every day. You know, I do this every day because I love it. I know people want the updates and I like covering the day to day. But if you really mentally are feeling drained by this, yeah, just like kind of don't keep up with the markets. Don't look at the portfolio. As long as you're not leveraged, you kind of don't need to worry about margin maintenance or any of that stuff. And I don't know, come back in a month or two and then maybe it's a little bit better. But if it's really hurting the mental, I would think everyone should just take a break from it, which is, it's not a bad thing to just relax your mind on it. Now, granted, all of you guys are like me, or I would say 99% of you, that are stock market junkies. And it's hard to stay away. It's really hard to stay away, especially when there's breaking news. So I understand not being able to stay away. But no, seriously, if you're really having like mental issues, like especially if the amount of money that you're losing is intense, like at the end of the day, the two things to remember are if you're invested in the right companies, it will come back, even if it takes time. And you might not have to keep up with every little day-to-day movement of whipsaws that are announced in the headlines. NVIDIA right here, getting a big bounce, 103.56, down 7%. We got 7 minutes left. Maybe that actually closes in that 104, 105 level, which is basically where we were at 9:30. Even Meta, 497 to 502. Tesla above 240 would be nice. Palantir above 91, I think. Yeah, 92.20. Not bad at all. That was right before J-Pow spoke. So, and Bitcoin trying to get back to 85. Seeing a little bit of recovery across the board, but obviously it still looks like it's going to be a pretty nasty day. Just got here. What happened 23 minutes ago? J-Pow said there's not a Fed put. That's what happened. And that's why we're feeling what we're feeling right now. This is a trader's market. Most people are investors, and that's why we have all the poo-poo faces. Yeah, that's fair. I mean, but even the traders, right? Like, you got to be a good trader to navigate this volatility. Like, you got to really know what the hell you're doing, because traders can get hit pretty badly on both sides, either bullish or bearish, if they're not sure exactly what direction things are going to go. Like when Chair Powell said there's no Fed put essentially today, if you were long, I mean, you had to switch short really quickly because the market was tanking in front of you. And then if you decided to go short 20 minutes ago, now your short's underwater because we're getting this green candle. Like it's just not, trading's not an easy game at all. That's why long-term investors tend to win more than often than not, but still it's aggressive. A lot of this volatility is very, very aggressive. One thing I will say though, and this is also advice to myself, is like the volatility is a lesson. A lot of you guys went through 2008. I didn't go through that. A lot of you guys went through the dot-com bubble. I didn't go through that. The most I went through was COVID, but I didn't have a lot of money invested. And when I finally had a decent chunk of money invested in 2022, I went through that, but I didn't really know what the hell was happening. What are interest rates? Why are we raising rates? Like I didn't understand it at the time. Now I think I have a much better understanding of the macro, but if you're going to be investing for a lifetime, then you kind of need these experiences as well to help navigate the future experiences of volatility, which there will be plenty of. And so I guess all of this at the end of the day is experience for the future, which, yeah, it sucks seeing portfolios get hit, but there's not much we can do about it other than deal with it and try to navigate it. Yeah, we are getting a lot of V shapes here, though. A lot of V shapes. Dude, if the special guest is Katy freaking Perry and it's some freaking, you know, like celebrating the space accomplishment or something, I think that would also be pretty let's just say that wouldn't be a pretty big special guest. But I guess we'll see. 3 minutes until the close. Let's take a little bit of a look at this right here as we get into the close, and then we will ring the bell and see who this special guest is.
Pisani on these crucial and fast-moving moments as the trading day comes to be persistent, right? They've been going with the idea that this could be temporary and transitory. This sounded like something a little more longer lasting, perhaps. I also thought it was interesting. I'd love your take as well on this idea of developing tension within the mandate.
Yeah. So he had to say that there's a risk that inflation might be more persistent. Here's why. When you get a tariff increase, most companies I talk to, they're waiting to see how this unfolds, but they're going to negotiate with their suppliers. They're going to do some price increases, and some will come out of margin, and many will take 2 or 3 years to recover the margin. That means more than one price increase. Price increases over 2 or 3 years, and that's why he said this has potential to be more sticky than a one-time price increase, and I agree with him. And on the tension in the mandate, you and I have talked before, if unemployment stays well-behaved and inflation is sticky, they won't be able to act. If unemployment spikes, then they'll have to look at acting and think maybe the demand destruction may offset some of the cost shocks. But they're going to have to see that first and analyze it before they act. And that's certainly not by May. And that's one meeting at a time. And I think he's trying to convey that so they keep their options open.
How concerned do you think he is right now about?
All right, here we go. Final minute to end out a absolutely wild Wednesday in the stock market. Tomorrow is the last day of the week for the markets. We are not going to be open on Friday. We're getting, I would say, a decent green candle into the close. It looks like the S&P is still going to close negative 2.2% on the day. So we will get a nasty 2% day, which is not fun, but at least it's not negative 3%. And again, maybe this pseudo pump we're getting is because of this White House 4:30 special announcement, which we still don't know who the guest is going to be, but we will find out in about 30 minutes. You guys saying Kid Rock and Bill Maher? Goodness, dude. Well, we'll find out. We will find out pretty soon. All right, here we go. Wednesday, April 16th, 4 p.m. Thank you, everybody, for being here. The stock market is now closed. All right, there we go. We are done for the day. S&P 500 ends out negative 2.25%, down just a little bit after hours, 2.21% on the S&P. You got SoFi right here down about 2.56%. Nvidia was down 6.87%. Not bad, dude. I mean, this thing was barely hovering over 100 20 minutes ago. Ends over 104. It looks like some buyers came in towards the last 10 minutes of the day. And maybe that will be for a reason. Palantir right here at 92.71. That was down about 5.78%. Grab was basically flat, down about 0.5%. Enphase was down 2.49% after being green in the morning. Reddit down about 1%. Lyft was down. Rocket Lab still basically at 1998, even though that was down 5% on the day after yesterday's 15% move. Nubank down 0.33%. United Airlines, after good earnings, was flat on the day. Costco down about 1%. SMCI was down 5%. All the semis got hit along with Nvidia, but they did recover slightly in the last 10 minutes of the day. Shopify was slightly green. Spotify was down about 2%. SoundHound right here down about 5.7%. Trump's speech, or not Trump's speech, but the White House press briefing is at 4:30 Eastern time, so 30 minutes for everyone else. And we'll find out who this special guest is going to be. Webull ends the day down 12% after being up 20% during the day. Q's down about 3%, and then Robinhood down 7.76% after being down almost 10% earlier in the day. Bitcoin still green, 84,395 right now. All right, cool. That is the market close. For those that are just joining, we had a variety of things happen today. To summarize them in a nutshell, Jay Powell spoke at the Economic Club of Chicago, and he said there is not a Fed put. He says he feels no pressure to cut rates because tariffs are going to be more inflationary than he thought. And he says he sees meaningful risks to growth slowing down and inflation going up, aka stagflation. So those three comments by Jay Powell were not constructive for markets. That's where we saw Nvidia really get hit along with the broader indices. And that was kind of the major announcement of the day that everyone focused on. The other announcement of the day that I thought was really important is the China negotiations, what the Wall Street Journal reported, which is that the United States is now working with 70 other countries, or that's their plan for 70 other countries, to potentially isolate their supply chains and their ability to ship goods through the countries with China. AKA if China needs to go through Thailand to import certain goods, the United States wants Thailand theoretically to stop China from allowing their goods to be shipped through the country. This would immediately escalate the trade war. This would be very aggressive. This would be an incredibly escalatory approach in terms of how the United States is thinking of China as a trade partner and as an adversary. But that seems to be one of the different deals that the Wall Street Journal is reporting could be going on right now. Gold, the price of gold continues to go higher, 3.5% on the day. I think that's a record day for gold. I don't know the last time we were up almost 4% on the day with gold, but it looks like people are selling off their stocks and they're buying gold. The one good thing about the day is that bond yields are coming down, but the reason bond yields are coming down more likely than not is because of the fact that the market's afraid that growth's going to slow down. If growth's going to slow down, interest rates are going to get cut. They're going to get cut for the wrong reason, not for inflation's coming down, but rather inflation's coming down because growth is coming down, which would be a recession. And so they're locking in their yields right now by buying bonds, which is a good thing for the bond market, but it's a signal to the equity markets that we might have some more pain coming in the context of a growth slowdown. The S&P 500 slightly up a little bit after hours. Nvidia still down after hours, 104.45. Robinhood up a little bit. Palantir up a little bit. But the far majority of stocks still down currently after hours. The world is dumping dollars to buy gold. Yeah, that could be one approach that's happening right now as well. The Dixie, I think, hit a new low of the year. DXY 99.34. Yeah, it was 99.54 in the morning. Every cent on the dollar index does have an impact overall in terms of FX and currency headwinds. So we do have a new low of the day there right now. What is the best way to invest in gold? It's just GLD. I think that's the easiest way you could buy gold, GLD. I think it's the BlackRock Gold Fund. Yeah, GLD. It might not be BlackRock, but this is the one that I know most people invest in if they want to get exposure to gold. I think this thing has how many? Let's check their AUM. Or you go to Costco, correct? Or you go to Costco. You can do that as well. GLD has Year to date, yeah, see, it's basically mimicking gold. It's up 25% year to date. It has under management, wow, $98 billion. There's been 80 billion net flows year to date on gold. The last time we had anything similar to that was 2020, where we had 40 billion in inflows, but that was for the full year. We have had 80 billion, double the amount of 2020 in the first 4 months. It's pretty incredible. And it's showing that people are obviously choosing to diversify through gold. All right, this is an impromptu press briefing. Usually the press briefings happen at 12 or 1. So we don't have any details on it yet. I'm trying to see if I can find any people that know what this press briefing is going to be, but so far it doesn't look like we have that. We do have an earnings update though right here. Let me pull this up and we'll at least take a look at the earnings that we have. But we will have the White House go live in about 20 minutes. Okay, let's pull this up right here. Hold on one second. Okay, yeah, let me pull this up. Here we go. All right.
The economy is going right now, and that's why you get these crazy gyrations every day.
I mean, Kevin, it speaks to the fact that we got 2 separate full-year forecasts from United Airlines in the show 24 hours.
An environment full of big, whose planning light is.
See, 7% they talk about. They are.
I think it is.
Well, train might be the right word to use because we have our first earnings report out, and it's CSX. Kate Rooney has the numbers for us. Hi, Kate.
Hi, Morgan. So it was a miss in the quarter for CSX. They are blaming operational challenges in the press release here. I'll give you those numbers, though. First, EPS, this was 34 cents. It's a 3-cent miss on EPS for the quarter. That was on revenue of $3.42 billion, down 7%. They talk about declines in coal revenue, fuel surcharges, and lower merchandise volume as well. A couple other key line items: merchandise revenue, a tad light here at $2.15 billion, volume down around 1%. And then it looks like pricing was down about 6% as well. I do want to bring you that quote, though, about those operational challenges, which appears to be driving the miss here. CSX, as they say, faced operational challenges. They say that contributed to first quarter results that did not meet our expectations. You can see shares down here slightly after hours. Morgan, back over to you.
Okay, Kate Rooney, thank you. We're down about 1.5% on CSX. Don't miss my exclusive interview with.
Okay, CSX, this is a $50 billion company. Apparently their earnings got hit. Oh, wow. Bill Ackman buys 20% of HTZ. Hold on. HTZ? Wait, what is this stock? I feel like I know this ticker. HTZ. What is this? HTZ. Hertz. Wow. Bill Ackman bought 20% of Hertz? Wait, this was you. Hold on. Did this news just come out? No, oh no, this news came out a bit, right? No, people are finding out now. Okay, it came out 20 minutes ago. Apparently, I didn't see this 20 minutes ago. Yeah, Hertz was up 50% on the day, and it's up another 7%, 10% after hours. Wow, I think all of us missed it, dude. I didn't see any of you in the chat saying this. Bill Ackman discloses 12.7 million share stake in Hertz. I missed this the entire day. Apparently, this was disclosed a couple hours ago, but I completely missed this. Wow, Hertz. Why did he buy Hertz? Car rentals? Uber and Hertz. I guess I missed this as I was like covering JPOW more heavily, but Hertz. Pershing Square Capital buys 12.7 million shares of Hertz. Does this make sense to you guys? It's up 50% on the day. It's up another 12% after hours, dude. This is what happens when you're a really big name in Wall Street, bro. You can make a purchase and like everyone can follow and it could just pump dramatically. But there's got to be some juice here that Bill Ackman is seeing. He bought it because my eyes hurts. Maybe Hertz is merging with Uber. Dude, if that's the case, I mean, come on, bro. That's definitely some insider information, given the guy owns $3 billion worth of Uber. So if we get a Uber Hertz acquisition, come on, bro. I don't think Ackman's dumb enough to do that. That would be an investigation immediately. You take a 12% stake in a company when your other company buys them out, and then you get a premium on top of the premium you get for buying it. Like, come on, bro. That feels like it's too explicit. But why would he buy it if there was not an Uber type of relationship with it, right? Like, why would you buy Hertz? CNBC says Ackman's firm now holds a 19.8% stake in Hertz when you count both, making them the second largest shareholder. Hertz might offer autonomous fleets. You know, that's a hell of an argument, right? Because if Hertz is offering the autonomous fleets and Uber is working with them, so maybe it's not an acquisition, but it's more of a, I would find it very hard to believe he's buying Hertz if there is no relationship with Uber. Because like why would you buy Hertz at that point? There's got to be something more exciting here than not. Tesla Hertz self-driving partnership. Doesn't Tesla have beef with Hertz? Didn't Hertz dump a bunch of their cars like a year ago from Teslas? Like they took them off the roads because they said people don't I don't know, what is it? Don't like driving them, don't like renting them. I don't know if we would get a Tesla partnership with Hertz. Yeah, Hertz was getting rid of their Tesla cars. Yeah, right. Damn, we missed that news throughout the day, but did anyone, you guys are hearing about it for the first time, right? Some of you guys might have known about it. I don't think anyone said it in the chat. I didn't see that. Huh. All right. 13G season's coming really soon. We're going to see if Buffett's been buying it all. We're going to be seeing what Tepper, all these other guys have been buying, but first one from Bill Ackman is now going to be with Hertz. We've got the White House going live in about 20 minutes with a special guest. We'll see who that special guest is. Let's get a little bit more coverage, and then we'll keep going from there.
And now we get these results from CSX, which are a miss, not only with volumes down, but also the drop in pricing to me is particularly notable, perhaps about the broader macro environment. What are transports signaling about the economy and the market right now?
A slowdown in the economy. Yeah, look, I'm an old school guy. I've been here 35 years. We were trained in the 1990s. Look at transports as a sort of advanced peek ahead to where people think the economy is going. And when you see transports starting to drop like this, that's a warning sign. That's a warning sign that shipping volumes might not be as strong as people think. Advanced orders, people think, may not. So you've got to keep an eye on this. Let me just say something quick about the tariffs. What we see now, the general hope is that these negotiations are centering on China primarily, which is a good thing. Everybody knows that's the right way to look at it. The problem is these other negotiations with countries, the other countries are going to be focused on what you guys need to do is be on our side, and let's figure out a way for you to stop dealing with China so much. I think everyone would support that concept, but it's a very strange way to go about it. It seems to be having the opposite effect. In fact, and this is what's making everybody concerned, our allies seem to be more interested in perhaps making other kinds of alliances than with us. That's the central problem here, and one of the reasons we have so much pressure on earnings.
Yeah, and certainly the U.S. and Japanese officials are meeting today, so that will be one to watch.
We have Kinder Morgan earnings. They reported after the bell as well. This is a stock that Steve is a fan of in terms of the pipelines. It looks like they beat on revenue, missed by EPS. Beat on revenue, missed on EPS. 4.2 billion versus 4.03, 0.34 versus 0.36. Kinder Morgan KMI, the stock is flat after hours. Okay, cool. Nothing too crazy. This one's supposed to be a boring stock, pays a dividend, not supposed to be moving that aggressively, but that's what you got for Kinder Morgan. All right, guys, 20 more minutes until we get this special press briefing from the United States, or from the White House. Again, the best part of this whole we don't know who it's going to be is just guessing who it's going to be. I feel like it's going to be someone more serious than someone who's a joke. I feel like it's going to be something serious. I'm going to give them the benefit of the doubt and say it's going to be something serious. It's not going to be like some comedian or something, or like Kid Rock. And like Kid Rock's great, but like, you know, he's not really moving markets or anything. MicroStrategy right here up a little bit after hours. The S&P up a little bit after hours as well. NVIDIA slightly down. The Q slightly up. Robinhood slightly down as well. But who is this person going to be? Howard Lutnick. Maybe. Shout out to Chad. Oh my gosh, Chad. This is quite the market. This is quite the freaking market right now. What if it's Chad? What if the special guest is Chad? Dude, if it's Chad, I will lose my shit, bro. If Chad is the special guest. Is it tariff related? We have no idea what this is about, dude. This is just a impromptu thing. It's not even like their daily press briefing. It's like an impromptu press briefing that they're having right now. Also, we did have another thing happen today. Let me see if I can get some footage of this. By the way, Art Laffer just published an entire supply side investment research. Looks like a 5-page PDF about tariffs. 7 pages. I have not read it. I'm seeing it right now. I'll read it tonight and we'll summarize it tomorrow. But apparently he is finally explaining what he thinks about tariffs as well. And Kathy Wood just tweeted it. She seems to agree with what he's saying. She also said, Kathy Wood, this is from Kathy Wood right now, I believe President Trump will get this call right. Okay, so Kathy's bullish that Trump's going to figure this out. Okay, cool. I guess we will eventually see if that's the case. Okay, we have some footage right here. Let me see if I can pull this up. Let me see if I can get this right here. Do I have the stream? Yeah, here it is. Let me pull this up right now. So we talked about in the morning that the state of California is officially deciding to sue the United States. Here's what Newsom had to say about that decision today. You guys are saying the special guest is Xi Jinping? Dude, if that's the case, 2025 hasn't even seen any volatility if it's freaking Xi Jinping.
I think the Attorney General did an exceptional job in laying out the framework of this lawsuit and the why as it relates to the particular issues under the IEEPA, and notably issues that have been brought to the fore as it relates to the major questions doctrine recently by the Supreme Court. I would just highlight just 2 of the specific examples the Supreme Court used as it relates to the major questions doctrine on the issue of student loans under the Biden administration, on the Clean Power Plan under the Obama administration. If they are consistent, then this lawsuit is a lock in terms of what the Attorney General has laid out and what this state is asserting. But I want to tell you what our state of mind is as it relates to the issues that impact the state of California, obviously the state of our union and the state of the economy more globally. We talk often about California being the 5th largest economy in the world. That is correct. We're also the largest manufacturing state in the United States of America, $412 billion output. And I want to put that in perspective. Texas is 41% smaller. It's a 41% larger share of manufacturing output just here in the great state of California. It puts in perspective something that often isn't communicated, I think, as effectively as it should be. By the way, the United States is the 2nd largest manufacturer in the world, which is also something that I think is important to highlight. So the manufacturing footprint in this state is disproportionately impacted by the tariffs, disproportionate to any other state in the nation. Of course, we talk about the 5th largest economy in the world. Let's put that in perspective. We're 14% of the U.S. GDP. That is 50% higher than the next state. No other state will be more impacted by the impacts of this, as Christine said, uncertainty that is best described as toxic uncertainty because of these tariffs. Let me underscore that with more consideration and context to where we are. We are also the largest hunting, fishing, agriculture, and forestry state in this nation, 150% larger than the next state, Texas. When folks talk to us about the impacts, regional impacts of rural economies, you're talking about California. You're not just talking about the Midwest and places like Texas. You're talking about our state, the state of California. Almonds you see around us, export dependent. Pistachios, export dependent. Dairy, export dependent.
Looks like Newsom thinks they have a case. He was referencing 2 older Supreme Court cases at the beginning that will set the precedent for what's going on right here. He's talking about all the things that California exports and manufactures. So it looks like that's the case he's going to go with, that California is the largest manufacturing state in the United States, and that there are other precedents to be able to avoid a federally regulated tariff policy if it were to affect a state that some could argue could be a country, which is California. I don't know if he wins that argument. I mean, who knows? Maybe that ends up going to the Supreme Court. But it looks like that's the route that he is currently going down. All right, we've got 8 minutes until we get this special press briefing. I still have no idea who it's going to be. This is what it looks like right now in the press briefing room. So everyone's just there waiting to see who this is going to be. Okay, let me do a poll in the chat. Let me do a poll. Let me see what you guys think. If you think this is going to be a serious announcement or a random guest. Dude, I think all of you guys think it's going to be a joke. Katy Perry, Ric Flair, like no one's named a serious guest. No one's named a guest you think it could legitimately be. All these are jokes. It's not Jensen, bro. He just tariffed the shit out of Jensen's company. There's no way Jensen's showing up to the Jensen. Mike Pence. Dude, that would be funny. Joe Biden. Joe Biden did give a speech yesterday. I don't think it would be Biden, though. Why is everyone saying Hulk Hogan? Why is Besant? Could you imagine if it was Besant? It's like, all right, well, I like Besant. He's not really a special guest, I would say. Okay, do you think the guest will be special or a nothing burger? Special nothing burger. It's not me. I don't think I can teleport that easily. So it's likely not going to be Satoshi Nakamoto. That's actually a good guess. Barron Trump, Spider-Man. I think the best guess, to be honest, is it's Trump. The best guess is I think it's Trump. And he's probably going to just talk about tariffs and like talk about their strategy or something. That would be my best guess, because I don't think it's going to be Japan. It's too quick for it to be Japan. I don't think it's going to be Carp. I don't think it's going to be Cristiano Ronaldo. What do I mean by special? I mean, the White House said the wording special. So either it's going to be like a serious press conference, or it's going to be, I don't know, some like random fun press conference that's not going to affect markets, but like, I don't know, maybe people get a laugh out of it. I don't think it's Chris Patel. I don't think it's Warren Buffett. By the way, Warren Buffett did an interview the other day, and he tried to be as apolitical as possible, but you could tell he was obviously very disturbed by some of the tariff policy stuff. But they kept asking him, like, so do you support that? And he like wouldn't give an answer, but you could tell obviously he's not loving this right now. Granted, he's sitting on a lot of cash, so you should be okay. Trevor Milton, huh? Larry Fink, Rory McIlroy. You know, I found out about who this guy was on Sunday. I didn't know this guy was this big in golf, but apparently it's a big, big golfer. Dude, the only golf guy I know is Tiger Woods. That's it. Oh, and what's that other guy named Mitch? Mitch, right? Something with Mitch? Definitely getting it wrong, but Mitch something. It's Tiger Woods and another guy that's really important. DJ Khaled, bro. Another one. Imagine they announce a new set of tariffs and they have DJ Khaled walk in. It's like another one. Oh my God, I would lose my shit. I would lose my shit. Could you imagine that? Oh, Phil Mickelson. Sorry. Yeah, not Mitch. I meant to say Mickelson. Yeah, Phil Mickelson. That's the guy. Another one. Jamie, thanks for the $5 super chat. Why would they have them standing if it was from a country? Yeah, I agree. Now, granted, Trump did do a press conference with the Taiwan prime minister in the Operation Stargate with Sam Altman and Larry Ellison, and everyone was standing. They were in the Oval Office, but they were all standing. But that's fair. A head of state standing in the press briefing room feels a little weird. So maybe that's not going to be the case. Amit, can you give a summary on what Jay Powell said? He said 3 things. He said, number 1, I think inflation from tariffs will be longer than expected, aka not transitory. Number 2, he said we see slower growth forecasts and higher inflation. And number 3, he said there's no Fed put. He didn't literally say that, but essentially he said that the Fed's not going to step in and buy treasuries unless something really breaks, which means the Fed's not going to bail us out here. He also referenced Ferris Bueller's Day Off. Dude, I'm so happy I watched that movie last year. I actually get the references. It's so nice to actually get the references sometimes, because I'm used to not getting it, but when you get it, it just like feels like you're so powerful. You're like, yep, I know what he's talking about. And so I'm happy I watched it. It popped up on Netflix like a year ago, and I was just like, all right, let me turn this on. Then I actually kind of got interested. I was like, all right, this is kind of a good movie. So I'm happy I watched it. All right, 3 more minutes, folks. 3 more minutes. Ferris Bueller's Day Off. That's the movie. I don't think it's Taylor Swift. I don't think it's LeBron. I don't think it's Tom Brady. Amid it's been a day. I need a mocktail. You and me both, brother. I don't think it's Alex Jones. I don't think it's Sean Hannity. It's the Easter Bunny. I mean, that would be cute for the kids, but I don't think it's the Easter Bunny. It's Jay Powell. It's the Hawk Tua girl. Well, the SEC did officially say that she's not going to be charged with any crypto scam, so it was good for her. Dude, now I'm really curious, bro. I'm really curious who this is going to be. I'm curious if markets are going to move on it. Everything is flat after hours. S&P's up just a little bit, so it's the calm before the storm. I guess everyone's waiting to see who this is going to be. This is interesting, bro. Maybe they're going for a tariff press release here, a market press relief. Maybe they're going for a maybe they're trying to get brownie points with their base, and they have someone that they know people would love to hear from. Like, I have no idea what route they're going with here. There's a deal with China. Could you imagine? Like, dude, a deal with China would be insane. I don't think that's going to be the case. I don't think it's Vlad. I don't think it's Stephen Colbert. What'd you guys say on the poll? What did you say on the poll? On the poll, you have a nothing burger. Wow, 75% of you say it's a nothing burger. All right, I'm going to go the opposite direction. I think it's going to be a something burger. I think it'll be something. How do we define a something burger? I guess something burger to me is something to do with markets. Maybe it doesn't move the markets, but it's something to do with tariffs, inflation, markets. I think it'll have something to do with the markets. I'll say it's a something burger here. It's not Xi Jinping. I don't think it's Xi Jinping. It's not. Elon already is there every day. Oh, by the way, we got some updates on Elon. It's not really Tesla related. It's more TMZ related. I'm pretty sure some of you guys know what I'm talking about today, but there was a pretty big article in the Wall Street Journal on what's going on with Elon and his baby mothers. But I don't think it's going to be Elon here. I don't think it would be Elon. Yeah, I don't think it's going to be Jensen either. Wait, Pam Bondi? Is it actually Pam Bondi? Is it? Do we have confirmation on that? Is it Pam Bondi? Let me see. Is it Pam Bondi? Oh, I'm seeing a lot of rumors that are saying it's Pam Bondi. That's the AG. I mean, if it's Pam Bondi, dude, this probably has nothing to do with the markets. This probably has to do with something else. It might have to do with the MS-13 stuff, the Salvador stuff, but this would not be a market-moving thing if it's Pam Bondi. Yeah, if it's Lutnick or Besant, that would be something the market cares about. Pam Bondi is the Deputy Attorney General. I don't have any confirmation on that, though. But I do see some tweets of people saying it might be her. If it's Lutnick, I'm out. Linkin Park. Dude, I haven't listened to a Linkin Park song in a long time. Linkin Park, great band. Great band. You know, my favorite band of all time? My favorite, honestly, dude, my favorite band of all time, like One Direction is a hell of a band. I mean, I don't think we give them enough credit. I really don't. One Direction, dude. Like, it's not a horrible band. I know they broke up back in 2015, but. All right, I'm kidding. That's not my favorite band. That's not my favorite. I'm kidding. I like one song that they made that I listened to in 2012. I'm not a real One Direction fan, although I did get stuck in a YouTube Shorts freaking rabbit hole the other day, and I was trying to figure out, like, why did the band break up? Like, I was really curious about it, but that's not my favorite band. But Little Things, I don't care who you are. If you haven't listened to Little Things by One Direction, I mean, I think it's up there in terms of the best songs that you could listen to. I would say it's like a top 200 song of all time. Not even gonna lie. Little Things. No, on some real shit, my actual favorite band is the Beatles. Like, I love the Beatles. Obviously, I didn't grow up during the Beatles time, but I think it was about like 5 years ago. No, it was more so around 2011 because Michael Jackson died 2009. And so then I started getting into, like, Michael Jackson owned the Beatles catalog. So I started researching more about them. And then I like discovered, you know, Let It Go, Hey Jude, Hold My Hand, all these amazing songs. And so the Beatles, that's not a mid answer. Okay. Okay, Tanner, that's not a mid answer. Like, no one can deny the Beatles are top band of all time, or at least top 3. Granted, if I said Backstreet Boys, that would be, yeah, then I get it. It's the Beatles, baby. It's the Beatles. Let It Go, the Beatles. Yeah, we need to take some advice from the Beatles in this market. Let it go, bro. Just let it go. You have the taste of a 9-year-old girl in 2010. No, but One Direction, though, they did have some good music. Like, let's not, you know, maybe they're not the best band of all time, but it's not like they didn't have good music. All right, bro, it's 5 minutes past the deadline. Where is this freaking special guest? If it's Trump, it might not start for another 30 minutes, guys. If it actually is Trump, because they always start late if it's Trump. So I think if it's Trump, we might be here for longer. It's Tanner since they're late. You know what? That's probably true. Tanner is literally in the backstage in the chat right now, knowing he's about to go live. Oh, it's Let It Be? Oh, shit. I just ruined all my credibility there. Oh, it's Let It Be. Wait, is it Let It Be or Let It Go? No, it's Let It Be. It's Let It Be. It's Let It Be. It's Let It Be. Damn. You guys know what I'm talking about, though. You know what I'm talking about. Damn it. I actually do know the Beatles music, bro. So like it just because I got that word wrong doesn't mean I don't know the Beatles music. Oh, here's a good Beatles song that's like an OG song. Eleanor Rigby. Come on, bro. You got to be an OG fan to actually know about that song. Oh, Let It Go is Frozen. You're right. I forgot. Eleanor Rigby. Let me see some other songs. Let It Be, Hey Jude, the I Want to Hold Your Hand song, which I think is called Hold Your Hand. All right, I'm under a lot of pressure right here, but give me a second. Oh, Yesterday. Come on, bro. Yesterday. I'm not looking at anything. I promise. I'm not looking. There's no ChatGPT. I'm not even looking at the chat. I'm trying to figure it out. I can't think of any more songs. There's too much pressure. I can't think of any more songs, but I got those 5. Oh, Here Comes the Sun. Yeah, there you go. Okay, to my credit, I haven't listened to the Beatles in a long time. So, like, it's been a while since I actually went through the album, but I did have my Beatles phase, and I got acquainted with their music. And I learned a lot about that story with John Lennon and his wife and everything that happened because it so I did go down that rabbit hole. Farzad says I'm deleting your YouTube. Okay, but do you guys know Paul McCartney's last album? And do you know the songs off that? Because I actually listened to Paul McCartney. Accentuate the Positive. That's how I learned about what the word accentuate means. Accentuate means to amplify. I learned it because in 2012, Paul McCartney made a song called Accentuate the Positive, which essentially means focus on the good, not the bad. So see, the fact that I can say these things, I do have knowledge of the Beatles and Paul McCartney and all that stuff. It's just on the spot. I can't think of more than 5 songs. The Chinese embassy just posted something. What did they say? China embassy. Hold on. What did they say? Oh boy, hold on. Let's see. Chinese embassy. Oh shit. Wow, they're putting out memes, bro. Holy crap. They're putting out memes. Look at this. The art of the deal. Those are Trump's hands. Got tariffs on his wrist. And he has all the cards with the different percentage rates. Damn, bro. They're really putting out memes about this. Holy crap. Did Trump tweet? Trump just tweeted this picture. This is what he tweeted. America is back with 2 headlines about Honda shifting production. Oh, is that going to be the announcement? Honda? Is there some new announcement about a company bringing production to the United States? Is that why he just tweeted this? Maybe that's the case. Again, no one's live yet. Still waiting on press secretary. But China just put out that meme currently right now. But this headline from Honda is old, right? Oh no, that's today. Honda to shift production of Civic from Japan to US on tariffs. That's today. That says April 16th. I think that's the news, guys. I think it's going to be a production news, which technically has to do with Japan, right? Because they're shifting from Japan to the US. I think, why would he just tweet that just now before going live? I think that's it. I think that's a market moving type of news, right? I don't know if the market's going to care that much, but at least it has to do with the markets. Civic spells Civic backwards. Thank you, Farzad. What do you call that? When it's something spells itself backwards, there's a name for this thing. I'm not even going to try to guess because you guys can make fun of me, but there's definitely a name. It's not an acronym. An acronym is different. It's palindrome. That's correct. See, I knew it. I just didn't want to say this word in a butchered way and then get made fun of. So, but I knew that was the word. There you go. Palindrome. Damn, you guys are smart, bro. You guys are so smart. Like, you guys just like forget ChatGPT. You guys know everything. Just ask a question and you guys have the answers. No, we still don't have the special guest. We still don't have it. As soon as you see him look live, as soon as you see any movement on the stage, you'll see who comes live. I cannot call Steve. He's at work. I really wish I could. By the way, guys, if Steve wanted to call in, he would just call. At this point, he just calls in whenever. So Steve has an open line to this show whenever he wants, but I don't always have an open line to him because he actually has a job and he's kind of busy sometimes. And again, he does not care. He really does not care about any of this, as long as over the long term, the thesis is intact. Fox has special guest in quotations. Yeah, so did the White House. So no one really knows who this is yet. Like Steve, like, you know how all of us care about the special guests? I'm telling you, Steve would not care. Steve would be like, oh, cool, let me know who it is. Like I get excited. I'm like, oh, who's the special guest? Let's speculate. Let's see who it is. Like Steve would be like, okay, cool, whatever. So I don't think he cares. Bank of America downgrade on HIMS. What are they saying? Underperform, price target 22. Growth slows in March, but still meaningful upside in Q1. That's fair. Bank of America has been pretty bearish HIMS for the whole year, to be honest. So wouldn't expect them to get super bullish here. Steve works at Grok. He gives them all the answers. Dude, Steve has all the answers, always. Steve is actually like a really good person to get life advice from. Like I've put a couple situations in front of him in terms of like, hey, what would you do if you were me in this situation? And he's like actually very good to get a ton of different perspectives from, you know, because he has a lot of life experience and he thinks very deeply about a lot of different things. Yeah, he's wise. That's what I'm looking for. He's wise. He's great on stocks, but also if you're making a life decision, he's also really good to kind of help you personally navigate what's going on. Yeah, he calls me a good role model every time. Steve's a good guy, dude. He's a really good guy. I'm supposed to be getting dinner with him, I think, next week in New York. Him and another friend. I think we're going to some Italian place because I told him Olive Garden was my favorite Italian restaurant, and then he got mad at me. So, yeah, it'll be an Italian place in New York. All right, I think they're gonna start soon. There's this guy who just walked in. I don't know who that guy is, but maybe that means we're getting close. Is this the special guest? Imagine it was this guy. Dude, this guy doesn't know all thousands of us are just staring at him, waiting for some special guest to happen. He's watching the market close on the laptop. Oh my gosh. Who is this person? Who is this guest? That guy's Doge. Yeah, that's facts. That's the Doge guy. That is absolutely a Doge guy. That's the intern. We scared him away. He saw the chat. He was like, I can't have all these people staring at me right now. I gotta leave. He entered the wrong room. Dude, who is this person gonna be, bro? I feel like it's based on what Trump tweeted, this Honda thing. What if it's like the president of Honda? Like what if it's I feel like that would have leaked though. I feel like if the president of Honda flew over to the United States, people would have known about it and that news would have leaked a while ago. But I didn't hear anything about that. What else? Bruce Lee. That would be interesting. Shout out to the Warriors, by the way. You guys keep saying LeBron James. The Warriors making the playoffs officially by beating the Grizzlies. So looks like the Warriors will have a spot in the postseason. Dude, I really want LeBron to win his 5th ring. Like, I would love to see that happen. I would love to see, I still think Jordan's the GOAT, but it would be amazing just to see LeBron and Luka get a ring in LA. Like, that'd be really cool. I don't know if they can, but that would be fun to see. Yeah, playoff Jimmy. We get playoff Jimmy Butler again. That's facts. I don't think it's going to be Zelensky. I don't think it's going to be The Rock. I think it has to do something with Japan. Think it has to do something with Japan. Of course they're late, bro. Every time. This whole year, they're like at least 30 minutes late. I mean, another 15 minutes, they'll be 30 minutes late again. Oh, here we go. I think we're starting. Is that her? Is that Caroline? Yeah, that's Caroline. All right, here we go. I think this might be it. Have any audio yet? Let's see. That's her, right? That's the press secretary. Yeah. Oh, who's this guy? Who the heck is that guy? Who's that guy? Someone figure that out. Who's this guy? Is he from Honda? Did someone Google the Honda president, Honda CEO, and then rewind 10 seconds and see if that's the guy? You guys are saying that's not her? No, I think that is her. I think that is. Put the audio down again. Is that the special guest, that guy on his phone right there? If that's not it, then I guess we still have to wait. Yeah, I guess not. I think that's her, bro. Granted, I think she's a bit taller than the girl who walked in, so that might not be her. Who could this be? It's Steve. I don't think it's going to be. Maybe that's why Steve's not calling me right now. Maybe because he's there. Who is this guy, bro? It's Gucci Mane. Oh my gosh. What if it's Tim Cook? What if it's like a big announcement around bringing back those beautiful manufacturing jobs on iPhones to the United States? What if it's Paul McCartney, bro? What if it's Paul McCartney? Like, that would be quite ironic, given we were talking about the Beatles. It's an Optimus robot. I think when the Optimus is ready, Trump would definitely do a press conference with it. But I don't think that's what it is. I don't think it's Kanye. I don't think it's Kanye. It's not Nancy. It's who is, dude? I have to default to it's Honda. It's going to be something to do with Honda in Japan. I think that's the easiest way to resolve this, but maybe it's not. Michael Burry. Dude, we haven't heard from Burry in so long. Last time we heard from him, he tweeted one word in January of 2023. The word was sell. Obviously, that did not work out right, but we don't know if he's like super bearish. I think he's still heavily exposed China right now. But I don't think he's, well, maybe he went short the market, but we don't know yet. It's, you guys are saying, you guys keep saying Katy Perry. It's the crypto czar. Is it, do you think it could be a Bitcoin headline? Well, there was a rumor the other day that they're thinking of swapping out half of the gold reserves for Bitcoin. Maybe that's too much hopium here. Don't think it's Elon. I don't think it's Michael Saylor. Why do I keep seeing tweets around Pam Bondi? See, like, but I don't think that would be a special guest. That's not a, Pam Bondi is not a special guest. Trump posted the link to the press conference. Let me go to the official White House stream. This is a different one. Let me check The White House stream. Oh, it started. Here we go. It started. Here we go. We're starting.
Abrego Garcia as a Maryland father. There is no Maryland father. Let me reiterate.
It has to do with immigration. It has to do with the El Salvador immigration case. It looks like this is not a market type of press conference.
Great. Kilmar Abrego Garcia is an illegal alien, MS-13 gang member and foreign terrorist who was deported back to his home country. And when Kilmar Abrego Garcia was originally arrested, he was wearing a sweatshirt with rolls of money covering the ears, mouth, and eyes of presidents on various currency denominations. This is a known MS-13 gang symbol of hear no evil, speak no evil, see no evil. Abrego Garcia was also arrested with two other well-known members of the vicious MS-13 gang. And two separate judges found that Abrego Garcia was a member of MS-13, and that finding has never been disputed. And just this morning, it was revealed through Maryland court documents that Abrego Garcia's wife petitioned for an order of protection against him for 2 instances of domestic violence in May of 2021. And here is the order right here. The court ordered that the respondent committed the following acts of abuse. Once in May of 2021, assault in any degree. And on May 4th of 2021, he punched and scratched his wife, ripped off her shirt, and grabbed and bruised her. This is from a court in Maryland. So not only are Democrats rushing to defend an illegal criminal foreign terrorist gang member, but also an apparent woman beater. To set all of that aside, the basic fact that he was illegally inside our country and had a lawful deportation order made him subject to removal back to his home country of El Salvador. And if he ever ends up back in the United States, he would immediately be deported again. Nothing will change the fact that Abrego Garcia will never be a Maryland father. He will never live in the United States of America again. And the United States Supreme Court ruled unanimously that the President of the United States and the Secretary of State could not be compelled to forcibly retrieve this citizen of El Salvador who is currently locked up in a maximum security prison in his home country due to his MS-13 membership. To remind the media and the Democrat Party, MS-13 are among the most vicious and dangerous individuals in this world. They pose a direct threat to the United States, El Salvador, and any other country who maintains basic law and order. MS-13 rapes innocent girls and women, runs sex trafficking operations, murders for sport, and terrorizes law-abiding people. That's why El Salvador President Bukele made it clear this week that he will not be releasing this MS-13 gang member from his prison. But that is not enough. All of that is not enough to stop the Democrat Party from their lies. The number one issue they are focused on right now is bringing back this illegal alien terrorist to America. But where are the Democrats applauding the fact that southern border crossings just hit a historic low? Where are the Democrats supporting our brave men and women of law enforcement who are putting their lives on the line every single day to arrest the violent illegal alien invaders that the previous administration allowed into our country? And where are the Democrats when innocent Americans are victimized by illegal criminals that Joe Biden let in? It's appalling and sad that Senator Van Hollen and the Democrats applauding his trip to El Salvador today are incapable of having any shred of common sense or empathy for their own constituents and our citizens. Nobody knows this more than the woman standing to my right, Patty Morin, whose beautiful daughter Rachel was brutally maimed and murdered at the hands of an illegal alien in August of 2023. Patty no longer has her daughter because of the failed Democrat Party's open border, and these are policies that President Trump is bringing an end to. Patty should not have to be here today, but she is, and we are grateful and we are honored for her willingness and her request to share her powerful story with the world. Thank you, Patty, for being here.
Thank you. A lot of you don't know the whole story about Rachel and about the crime that was committed against her. Even us, her family, we didn't know all the details. They kept most of it close to their chest. The detective.
All right, guys, do we need to watch this? I mean, if anyone really wants to watch this, I'll put the link in the chat, but I mean, this has nothing to do with the markets. It absolutely, I would say, caught a ton of people off guard. We thought this was going to be a market moving thing. Tariffs. Nope. It is, it has to do with illegal immigration. I haven't done a lot of research on this case, so I don't want to give my opinion on it. It's super political. I know it's polarizing, so I don't even want to talk about it. But obviously, the elephant in the room is that the administration deported a guy. The Supreme Court allegedly said you can't do that. The administration's interpretation of the Supreme Court unanimous decision is that they're saying the district court is wrong so that we can do that. Now you've got a lot of people saying, hey, the United States White House is defying the Supreme Court, which is not a good thing. So there's a lot of back and forth on this. I mean, it has nothing to do with markets, but it seems like if they're holding an impromptu press conference, the White House is feeling the public heat of this case. And again, I'm not an expert on it. I don't study it day by day. I don't know exactly what's going on, but just from a bird's eye view, S&P 500 dropping a little bit after hours. For them to do an emergency impromptu press briefing and hype it up, it seems like they are feeling some of the public pressure and they want to shift the narrative. And that's the reason that they're going down this route. All right, cool. Again, I know this is super polarizing. I don't really have an opinion on it, mainly because I haven't done a lot of research on it, but the point of the matter is it's something that's obviously pressing to the administration for them to hold a press conference right now. Nvidia down 1.23% after hours. Market did go down a little bit after it was revealed that this is going to be about immigration and not about markets. So any buying that happened in the last 10 minutes of the day, expecting some big surprise bullish announcement, yeah, that didn't happen. That did not happen. So that is currently how this is playing out right now. All right, cool. I'm going to end it here. Thank you, everybody, for joining. We started the open 3.5 hours ago. We stayed live for that announcement. That announcement has nothing to do with the markets. So if you're curious and going deeper into it, you can. But yeah, nothing to do with what's going on currently right now in the markets. You know what was more fun than finding out what the announcement was? It was more fun trying to guess in the chat. And the guesses we got were quite incredible. I really thought it would be something about this Honda thing that Trump just, I thought it would be something more substantive in the context of markets, but that's not the case. That is not the case here. Anyway, at least we got to have a little bit of fun guessing who it would be. All right. Daily recap episode will be back. Will be posted later today. If you're new to the channel, I do a daily recap every single day, about 20 minutes recapping what happened in the markets. Market open, market close every day. We'll be back tomorrow on the market open. Thursday, it'll be the last day of the week for the stock market, as Friday is Good Friday, so the markets will be closed. But later today, we'll have a daily recap of the craziness that went on with Jay Powell, NVIDIA, Bill Ackman buying Hertz, and then all the other headlines that we got here today. All right. Thank you, everybody. Appreciate it. Love you all. I'll see you guys on the daily recap and then tomorrow on the market open. Bye, everyone. Thanks for being here.